Good morning, students. Welcome you all on the virtual coaching classes organized by Board of Studies of ICAI. And these classes are for financial reporting CA final level. I am CA Dr. Alok Garg. And today I'll take you through with Ind AS 115 revenue from contract with customers. So students, this standard revenue from contract with customers will take 5 classes. This is a very detailed standard, very lengthy standard, and very important standard from examination perspective as well as real life perspective. So if you will work in an industry, or if you will audit some balance sheet, if you will prepare some accounts under Ind AS, of course this standard plays a very pivotal role. So students, coming to this session, so as far as financial reporting curriculum is concerned, we have to learn Indian accounting standards, right? In India, as of now, there are two set of standards. One is accounting standard and the second one is Ind AS. Accounting standard and Ind AS. When I talk about accounting standard, these are our old standard. And when I talk about revenue, so we have two standards, AS 9 and AS 7. AS 9 and AS 7. When I talk about AS 7, it talks about revenue from construction contract. So it talks about how to deal with the revenue recognition, how to deal with the revenue in case of a construction contracts. When I talk about AS 9 talks about the entire revenue recognition. But now we have adopted a global framework, which is IFRS. And under IFRS, earlier there was two standards, IAS 11 and IAS 18. Again, IAS 11 was something which was talking about revenue from construction contracts, and IAS 18 was something which was taking care of the entire other revenue. But there was a project which was going on between the FASB and IASB. So when I say FASB, it is USA board, and when I say IASB, it is an international board. So there was a project which was going on, and the objective of that project was to have a single model for all the revenue recognition. Okay, so these two standards were demised, these two standards were deleted, and IFRS 15 was issued by IASB from 1st January 2018. And in India, earlier there were two standards, Ind AS 11 and Ind AS 18. So these standards were notified in 2015, 16 February 2015. And again, with the introduction of IFRS 15, these two standards were deleted and Ind AS 115 got issued. Ind AS 115 made applicable. Ind AS 115. So we have to learn Ind AS 115, which is applicable as on date from examination perspective as well as real life application perspective. So students, this standard is very important from examination perspective. So you need to have a more focus on this particular standard. And I would request all students who are live and listening right now, so please be interactive. Please put your queries on please put your query on the chat box or that admin or that query link which is given by ICAI. So I'll look at your queries and of course I'll answer those queries in between, right? So the agenda is clear. What this AS, Ind AS and IFRS is. Ind AS are the Indianized version of IFRS applicable to India. Okay. So Ind AS 115 is a counterpart standard of IFRS 15, which is applicable to India. So we are talking about Ind AS 115 revenue from contract with customers. So my dear students, I am taking you through an Excel file and let me know if the Excel file is visible. Yeah. So Ind AS 115 revenue from contracts with customers. As the name suggests, as the title suggests, this standard has three important elements. One is revenue. Okay. The second one is contracts. And the third one is customer. So what does it mean? It means this standard is applicable when there is a revenue. And if that revenue is with the customer due to a contract. So if these three elements are there, when there is a contract with a customer which tantamount to rising of a revenue, then only this standard will be applicable. Okay, otherwise this standard will not be applicable. Just for the sake of understanding what is meant by revenue, let's have an example. You all have heard about Ambuja Cements Limited, right? Ambuja Cements Limited. What is the purpose of this company? What is the business line of this company? This company is engaged in the manufacturing and sale of cements, right? So this company has an objective of manufacturing and sale of cements, right? So this company is selling cements, and this company has some surplus money. This company is selling cement, generating a profit making company, and this company is investing in some mutual funds. This company is investing in some fixed deposits, and due to the investment, this company is generating some interest income, right? Interest income. Now we need to understand three words. One is revenue, second one is gains, or let's say other income, we can say gains or other income. The third one is income. So my question is, which is the wider word? Whether revenue is the wider word or income is the wider word? First of all, my question is whether revenue is the wider word or income is the wider word. Which is the wider word? Revenue or income? Okay, so let me have a pause and look at the query screen. Okay, I'm just waiting for the students to respond. So Jay is saying income is the wider word. Rasika is saying revenue is the wider word. Okay. Okay. So let's understand the definition of revenue. What is meant by revenue? Revenue is an income. Revenue is an income arising in the ordinary course, of business, right? So revenue is an income. What does it mean? Income is not a revenue. Revenue is an income. So if revenue is an income, it means income is a wider word. So which kind of income? Revenue is an operational income, ordinary course of income, right? So we are talking about ordinary course of income, right? For example, so I'm for example, I'm a teacher. What is my ordinary course of business? My ordinary course of business is to teach students, right? So if my ordinary course of business is to teach student and Jay is my student, okay, so Jay is paying me and I am delivering this classes to Jay, right? So we have an agreement, we have a contract. Jay is my customer, being a student, okay, and I am teaching Jay. One fine day, I'll say, so I was having an old car, and I told Jay that, Jay, would you like to purchase this old car? So Jay said yes. But selling a car is not in the ordinary course of my business. I am not into the day-to-day business of selling car. I am into the day-to-day business of teaching, but I am not into the day-to-day business of selling car. So selling of car is a gains or other income for me. It's an income, okay, but it's not a revenue for me. Why? Because it is not in the ordinary course of business. Okay. For Maruti Suzuki India Limited, for Maruti, selling of a car is an ordinary course of business. But one fine day, when Maruti sell a property, right? For example, Maruti needs some cash and Maruti is selling, let's say, Manesar plant. So that is not in the ordinary course of business and that will not be a revenue. Sir, what does it mean? If that will not be a revenue, what you are trying to say? I am trying to say, if it is not a revenue, it will not come under the purview of revenue from contract with customer standard, which is Indian Accounting Standard 115, right? So for something being a top line of the company and something which should be applicable according to Ind AS 115, it should be revenue. And what is the revenue? Revenue is the income arising in the ordinary course of business. So here, sale of cements is a revenue for Ambuja Cements Limited. Okay. And when I talk about interest income, it is not in the ordinary course of business. When I say it is not in the ordinary course of business, I am trying to say the objective of the Ambuja Cement Limited is not to run its business through earning a interest income, right? If the revenue from operation will not be there, so Ambuja Cements Limited will go into the losses, right? They cannot survive on only gains or other income. They cannot survive on interest income, right? They are only surviving on selling of cement because this is their lifeline, right? So interest income is gains in other income. And what is the income? Income is the total of revenue and others income. If you have seen the schedule 3 format, okay, for companies, Ind AS is applicable to companies. And for preparing the financial statement of a company, of course, you have to refer Ind AS 1 as well as you have to refer Division 2 to Schedule 3 in case of a non-NBFC company and Division 3 to Schedule 3 in case of NBFC companies. So when you look at the Schedule 3, in Schedule 3, there was a line revenue from operations or revenue, other income, then total income. So what is an income? Income is the aggregate of revenue arising in the ordinary course of business as well as income arising in the non-ordinary course of business, right? So income is the aggregate of both these items. I hope this is clear to everyone now. Great. So Sai Ram, income is the wider word. I hope you have understood now, right? Good. I'm happy to see the lot of interaction and participation of the students. Good students. Yeah. So students, what is the contract? The second word is again a very important word. So you all have learned Indian Contract Act, okay, in your IPCC or CA Inter or in your BCom classes. What is a contract? Contract is an agreement. It's an agreement, okay, an agreement enforceable at court of law, okay. So contract must be an agreement enforceable at court of law. A father is gifting a car to his son out of love and emotion. Is it a contract? Is it a contract? This is not a contract. It cannot be enforceable at court of law. Two friends, one is chartered accountant and one is a businessman, right? So two friends just discussed with each other, okay, I'll help you in business by filing your GST returns, okay, and what you can do, just you can supply these goods to me on a quarterly basis, okay. So they are just entering, they have not entered into a contract, they are just have an informal discussion that okay, I'll help you in filing GST returns and you can just provide these goods or services. For example, he is into the apparel business, so you will provide me 10 shirts in a year, okay. There was no formal agreement, okay. There was no formal agreement, there was no penalty clause if someone will withdraw from the contract. I mean to say, if that fellow chartered accountant does not provide his help in filing the GST returns and that fellow does not provide apparels to this chartered accountant, so there is no agreement, it cannot be enforceable at court of law, there is no penalty clause, it means it is not a contract, okay. So what is a contract? And contract is an agreement which can be enforceable at court of law, okay. So for example, for your rights and your rights and obligation are supported by a contract which is enforceable. If the other party is not performing his duties, you can enforce him to performing his duties or her duties, right? So what is a contract? It's an agreement enforceable at court of law. So you have to take an inference from section 2 subsection H of Indian Contract Act, right? Clear? Now coming to the customer. Just couple of minutes before, I have taken an example of J, right? So I'm teaching J and I have also sold my old car to J, right? So what is meant by customer? Can anyone help me in understanding what is meant by customer? Yeah. Okay. Good. So customer is one who is purchasing goods and services from us, right? Okay. I agree. What else? What else? Who is the customer? A customer is a party or an entity. The customer is a party who obtains goods or services, A customer is a party who obtains goods or services which is an output of an entity, okay, in the ordinary course of business, in return or in exchange for a consideration, okay. So in my last example, if my ordinary course of business is to provide let's say classes to the students, right? So my ordinary course of business is teaching, right? So what is the output in the ordinary course of business? The output in the ordinary course of business is to provide classes, right? So who will be the customer for me? Going by this example, I am an entity. My ordinary course of business is to provide classes. Okay. So who will be the student? Who will be the customer for me? The customer will be my students. Okay. So my student is the party who obtain the services, who obtain the classes, and those classes are my output in the ordinary course of business. And of course, it is not honorary. Of course, it is not free of cost. Of course, they are paying me fees for that. Right? Right? So customer is a party who obtains that goods or services, which is an output of an entity in the ordinary course of business in exchange for a consideration. Okay. So students are paying fees to the teacher, and teaching is in the ordinary course of business of that particular teacher. Okay. And hence, in this particular case, when J is taking a classes from me, so J is my customer. But when J is buying a old car, old camera, okay, old scooter, okay, old Activa, so in that scenario, J is not a customer for me. It is not meeting the definition which is given under Ind AS 115. Why? Because it is not in the ordinary course of business that I need to sell. So I had to sell, or I will sell these kind of things to my customer in the ordinary course of business. I'm not into that business. Okay. That is only a one-off transaction. Sir, if a company has invested money into another company, okay, for example, if I have invested money into the Reliance Industries Limited, okay, in terms of equity shares, and I am getting a dividend from Reliance Industries Limited, I'm getting a dividend. Is it a revenue? Guys, is it a revenue? Is it a revenue? So dividend income, is it a revenue? I have invested money as in the debentures which are issued by Reliance Industries Limited, and I'll get an interest. Is it a revenue? Yeah. So Mr. Thota is saying it is not a revenue. Priya is saying dividend is income. Okay, it's a other income. Okay. So dividend is not a revenue. Okay, dividend is an income. It is not a revenue. Okay. So the ordinary course of the entity is not to have a dividend only. Okay, and it is not a contractual kind of thing, right? If the company will not pay dividend, you cannot go into the court of law and you cannot ask for dividend. Even you cannot ask for of principal as well, right? If the company goes bankrupt, even you cannot ask for the money which you have invested in the form of equity shares, right? So it is not an revenue, it is an income, right? So we understood three keywords: revenue, okay, then we have understood the meaning of contracts, and we have understood the meaning of customer, right? So we have understood these three words: revenue, contracts, and customers. And something to be fallen in this particular standard, there must be a revenue, there must be a contract, and that contract is always with the customers. Okay, so we understood these three meanings, the three words. We understood what is revenue, what is gains or other income, and what is a total income or an income, right? So we have understood these three things: revenue, contracts, and customer. I think the agenda is clear to everyone now, right? Okay, so friends, I'm moving on to my PowerPoint presentation now. Yeah. So what is included in the scope of this particular standard? I have told you that this standard is providing a single model to account for all the revenue transaction, right? I'm not saying that this standard is applicable to account for all the income transactions. I am saying this standard is applicable to the transaction with the customers. Okay, and so far we have understood the meaning of customer, contract. Of course, I'll deliberate on this contract thing, but we have understood that this standard is applicable to all the contracts with the customer except with the following, but the negative list is given. Okay, so it is applicable to all the contract with customer except with the following. So what are those exceptions? So we have understood that the leasing contract under Ind AS 116, okay, if I am a landlord and I have given my property or my premises on lease basis, right? So I will earn lease income. So that lease income will be covered under Ind AS 116, right? And hence it will not be covered under Ind AS 115, right? Insurance contracts under Ind AS 104. I am HDFC Life Insurance Company Limited. Okay, so I am earning a insurance income, policy income from my policy holders, right? So in that case, that kind of insurance income has to be accounted as per Ind AS 104, which is a standard on insurance contracts. Okay, so that kind of insurance income, like Future General Life Insurance Company Limited, HDFC Life Insurance Company Limited, LIC of India, so these companies are not accounting for their revenue. Of course, it is a revenue from operation because policyholder are the customer of that entity, but it will not be covered under Ind AS 115. It is covered under Ind AS 104. Financial instruments under Ind AS 109. Okay, so if there is a revenue on account of financial instrument, it has to be accounted for under Ind AS 109, not under Ind AS 115. Then I'll move on to the next part: non-monetary exchanges between the entities in the same line of business to facilitate sales to customers or potential customers. What does it mean? For example, I'm a teacher who is located in Delhi, right? And I have a friend, let's say, who is located into the Bangalore, right? So I am selling some goods. Let's say I am into Delhi and I'm selling some goods, and my friend is into Bangalore and he is in the same line of business. He is also selling same goods, right? So there is a customer from Bangalore who contacted me. For example, I have a website on which I am just locking the orders. Okay. So a Bangalore customer approached me on my website. He has paid me that I want this goods. Okay. Fair enough. So I have to deliver goods from Delhi to Bangalore. Okay. So instead of delivering goods from my Delhi godown to Bangalore, I have contacted my friend in Bangalore who is in the same line of business, and I told him that this is the customer, this is the address. Please deliver goods to this customer from your godown in Bangalore, from your shop in Bangalore. Okay. And in the same manner, I will facilitate your customer from Delhi or NCR, right? So if the customer will come on his website and they want to have a goods in Delhi or NCR, so on behalf of him, I will facilitate him, right? So my dear friends, the question arises, if we two person are into the same line of business, okay, and we are facilitating to each other, okay, for their customers. Now the question arises whether this kind of facilitating to each other, whether this will be tantamount to as a revenue, or I need to book revenue. For example, if that Bangalore customer clocked the order on my website, but it is delivered by that Bangalore friend. So whether I need to recognize revenue at this point of time, or when I will transfer goods to my Bangalore friend, or let's say when I will transfer goods to his customer in Delhi, so should I recognize revenue at that point of time? So in this case, when the customer approached me and it was delivered by my Bangalore customer, so I have to record revenue at that point of time. The non-monetary exchanges between the entities. So when I am delivering goods on his behalf and he is delivering goods on my behalf, at that point of time, revenue should not be recognized, right? Why? Because there is a risk of recognition of artificial revenue. Okay, if the contract, if this particular standard will not exclude such type of contract, it may leads to a rising of artificial revenue. We both will make a sale to each other, right? Okay, I'll sell him and he will sell me. Okay, so this will be rising to a artificial revenue, and hence if there are two entities in the similar line of business, so the exchange between them will be out of the purview of this particular standard. Clear? Certain transactions that do not arise from a contract from customer, such as dividend, etc., right? For example, if I am a holding company, I have invested 80% stake in my subsidiary company. So although I am doing a line by line consolidation, I am merging its profit into my business, my profit. So whether such profit, such revenue which I am merging, okay, is it a revenue under Ind AS 115? It is not a revenue under Ind AS 115. Okay, that subsidiary is not acting as a customer in this particular transaction. That is not acting as a customer for me, right? Is it clear, friends? Please let me know if you have any query so far. Great. I have seen a lot of interaction, a lot of participation on this query link of ICAI. Great, guys. I hope I'm comfortable. I hope my pace is right now. My pace is right. I'm not running fast. Good. Good. So friends, this was the scope of this Ind AS 115. Now I'm moving on my Excel file, and I will brief, although it's a very lengthy standard and we will cover this standard into 5 classes, but now I want to give you a helicopter view of this particular standard so that you will be able to summarize, so that you will be able to understand what we are going to learn in the next 5 classes. Okay, what is the main essence of this particular standard? As I have told you that this standard provides a single model for accounting for of all the revenue transactions which is happening with the customer, right? Okay, so let's start on the next part. So friends, now I want to give you first of all a helicopter view of Ind AS 115, right? So that you will be able to understand that what we are going to learn in the next 5 classes. Okay, when I say helicopter view of Ind AS 115, of course I will take you through 5 steps right now. Okay, and these 5 steps are the entire structure of this particular standard. Okay, when you have to recognize a revenue, okay, for any recognition, what is required? For example, you all have learned you all have learned an accounting for fixed assets, right? In your IPCC curriculum, or while doing an articleship, you are well versed with fixed asset standard. So for recognizing any transaction, what are the pre-requirement? For recognizing any transaction, the first requirement is identification, right? For example, if you have to recognize an item as a property, plant and equipment, you have to identify, is it a property, plant and equipment? Am I right? Am I right? So you have to identify, is it a property, plant and equipment? So first thing is identification. What is the next step? The next step is measurement. Okay, because in accounting books, you cannot recognize things which you cannot measure, right? because in accounting records you need some numbers. Okay, so you cannot recognize something which you can't measure. So first one is identification, second one is measurement, and then recognition comes into the picture, right? So same principle applies into the entire accounting of the world, right? And same three principle will apply here also. Okay, so guys, I would request each one of you, please focus on this particular example, and it will give you the entire overview of Ind AS 115 within a quick short of time, right? Yeah. So you all have heard about Voltas Limited. Okay, so Voltas is a provider of air condition, right? So Voltas Limited has sold an air condition to Mr. Ram on 15th April 2021 for rupees 50,000, right? For rupees 50,000. So they have sold this AC for rupees 50,000. Okay, understood? Is it clear? And the company has only delivered the AC unit till 31st March 2015, right? Sorry, it's not 31st March 2015. I don't know why this 2015 is running into my mind. It's 31st March 2021, right? And it should be 15th March 2021. Okay, so this company Voltas has sold an air condition to Mr. Ram on 15th March 2021 for rupees 50,000, and the company has only delivered the AC unit till 31st March 2021. Okay, the company promised, or the company has provided, the company promised to provide AC unit, stabilizer, installation, and one free service, okay, to the customer, right? The company promised to provide AC unit, stabilizer, installation, and one free service to the customer, right? Clear? To the customer. And this one free service to the customer over a period of 2 years, let's say. In 2 years, the customer can claim a free service at any point of time, right? Clear? So being an accounting expert, the company wants your guidance for recognition of revenue, in 2021, okay, and 2021-22, okay. And the another information is given: the stabilizer was provided on let's say the stabilizer was provided on 20th May 2021, and on 20th May 2021 the stabilizer was provided on 20th. The stabilizer and installation service was provided on 20th May 2021, and the customer has availed the free service in November 2021, right? In November 2021. Clear? So friends, this is the thing which this company wants from you guys. So this company Voltas Limited has sold an air condition to Mr. Ram on 15th March 2021 for rupees 50,000. The company has only delivered the AC unit until 31st March 2021. The company promised to provide air condition unit, stabilizer, installation, and one free service to the customer over a period of 2 years. The stabilizer and installation service was provided in the next year, which is in May 2021, and the customer has availed the free service in November 2021. Being an accounting expert, the company wants your guidance for recognition of revenue in 2021 and 21-22. Okay. So friends, now let's do the analysis of this particular thing, right? So friends, as far as IFRS 15 or Ind AS 115 is concerned, you have to weigh, you have to measure, you have to check this revenue recognition through 5 tick boxes. When I say through 5 tick boxes, you have to went through 5-step model. 5-step model. I mean to say, for recognizing the revenue in the books of accounts, you have to cross 5 steps, right? So we will discuss these 5 steps one by one, and these 5 steps are very lengthy steps. These 5 steps are very detailed steps, and we will learn a lot of things between these 5 steps. Okay. So as of now, I am only giving you the helicopter view of Ind AS 115 going through with these 5 steps, right? And I'll take you through with all these 5 steps one by one in these 5 classes with all the complexities, nitty-gritties, and I will cover the maximum questions from your study material, right? So you will have a revision, or you will have a practice, or you will have understanding of study material questions as well, right guys? Okay, coming to the analysis, the first one is step 1. What is the step 1? What is my step 1? My step 1 is, what is the step 1? My step 1 is identify the contract with the customer. Identify the contract with the customer, right? So you need to identify, is it a contract with the customer? Is it a contract with the customer, right? Whether the person who is buying the goods from Voltas is a customer, whether the Voltas which is selling an air condition is in the ordinary course of business, answer is yes. Okay. When the customer is paying money and the Voltas is issuing invoice to the customer, of course, they are entering into a contract. Okay. I'll discuss the nitty-gritties in detail, but for the sake of understanding Ind AS 115, for the sake of understanding this particular example, is it a contract with the customer? Answer is yes. This is a contract with the customer, right? This is a contract with the customer. Okay. Step 2. Step 2. Identify the performance obligation. Identify the performance obligation, PO. Identify the performance obligation, PO, in the contract. Guys, what is the performance obligation in the contract? What are the promised goods and services in the contract? What is the performance obligation in the contract? Please tell me. How many performance obligation in the contract? What is meant by performance obligation? Performance obligation means to deliver the goods and services. So how many promises are there? Can I say only delivering an air conditioned unit is the performance obligation? The stabilizer installation and this service is free of cost? Whether anything is free of cost? Nothing is free of cost in this world. Nothing is free. Okay. This is the entire package. This 50,000 rupees has been charged for a package, right? This 50,000 rupees is not for only the air conditioned unit. This is for the entire package, right? When you are buying a car from a car dealer, so car dealer is saying, okay, the cost of the car is 10 lakh rupees and you can get a 3 service or you can get a 5 service in the next 5 years, right? So don't you think that he is also charging for these 5 services? If you have not bought car from that particular dealer, and let's say you are a Hyundai, you are having a Hyundai car, and you went to Maruti dealer and you will say that that you are providing a free services then please provide this free service to me as well. Whether he will provide that free service to you? Answer is no, he will not provide. Why? You are not his customer. He has not sold a car to you. Okay. And even though they are providing the free service only to the extent which is there in the package. Okay. Because they have already charged for that. Right. So nothing is free. So in this particular case, what are the performance obligation in the contract? What are the item which needs to be delivered by this dealer? What are the item which needs to be delivered by this particular dealer? Guys, what are the items? Sairam is saying 2. Okay. Priya, what about you? Rasika, Jay, Thota. How many performance obligation are there in this particular example? How many performance obligation? So he has to provide AC unit. He has to provide a stabilizer, right? He has to provide a installation service, that is also having a cost, installation service, and he has to provide one maintenance service. I can say that one maintenance service. So there are four performance obligation in the contract. So how many performance obligation in the contract? There are 4 performance obligation in the contract, right? 4 performance obligation. Clear? There are 4 performance obligation in the contract. So first step was identify the contract with the customer. Okay. The second step was you need to identify the performance obligation in the contract, that what are the promised goods or services in the contract, right? So we have done through step 1, then we have done through step 2. Okay. Then what is the step 3? Step 3, determine the transaction price. Determine the transaction price. What is the transaction price in this particular contract? Very simple. What is the transaction price in this particular contract, guys? Guys, what is the transaction price in this particular contract? Please tell me. This dealer is selling this air conditioned package on 15th March 21 for rupees 50,000, right? Tanushree is saying 3. Sairam is saying goods as well as service. Thota is saying 4. You're right. Priya is saying 50,000. Yeah. So determine the transaction price. What is the transaction price? 50,000 rupees. 50,000 rupees, right? Step 3. So guys, first of all, we have identified, yes, Alok, yes, Mr. Alok, this contract is a contract with the customer, and hence we need to knock the door of Ind AS 115. Then we have identified that what are the performance obligation in the contract. Okay. So what are the goods and services which needs to be delivered, right? Then we have identified or determined the transaction price of the contract, entire contract. What is the transaction price? Then step 4. What is my step 4? Allocate the transaction price. Allocate the transaction price into the performance obligation, into performance obligation. Allocate the transaction price into performance obligation on the basis of their standalone selling values, standalone selling price. What does it mean? It means that if we have a 50,000 for this package, so this 50,000 needs to be bifurcated into these 4 performance obligations on the basis of their fair values, right? If I would have purchased only AC unit, then what would be the cost of this AC unit? If I need to buy this stabilizer, for example, Bluebird stabilizer from the market, so what is the cost of this stabilizer? If I need to get this AC installed from a mechanic or a technician, so he will charge 1,500 or 2,000 bucks. Okay. If I will have this maintenance service from let's say Urban company, Urban Clap. Okay. You must have seen the ad of Urban Clap, that please book your AC repair, AC maintenance service from Urban Clap or any other agencies, right? So you will have to pay, let's say 5,000 rupees, right? So all these items have their fair values, have their market values, have their standalone selling values. So this 50,000 needs to be allocated into these performance obligation on the basis of what? On the basis of their standalone selling values, on the basis of their standalone selling prices, right? And how to allocate? So let me again put this example in this way. There are 4 performance obligation, right? And I'll write down here as a performance obligation, okay? And here I will write down standalone selling price. I mean to say fair values, okay? If the company would have sell these items individually, or the market value of these items is so and so, okay? So what could be my standalone selling price or fair value? For example, only AC unit can be sold at 45,000, right? Only AC unit can be sold at 45,000. Stabilizer can be sold at 5,000, okay? Installation service could be for 2,000, and let's say maintenance service could be for 8,000, right? What is the total here? What is the total here, guys? Okay, so standalone selling price is 60,000. But what is the transaction price? What is the TP? What is the transaction price? The transaction price is 50,000, right? 50,000. The transaction price is 50,000. Am I right? So now this 50,000 needs to be allocated into these 4 performance obligation. So how can we allocate this 50,000 into this 4 performance obligation? In the ratio of 45:5:2:8, right? So equals to 50,000 multiply by 45,000 divide by 60,000, right? So it will comes out at 37,500. Then 50,000 multiply by 5,000 divide by 60,000, right? Clear? Is it clear, friends? I hope it is clear. Yeah. Then 50,000 multiply by 2,000 divide by 60,000, right? Then 50,000 multiply by 8,000 divide by 60,000. 6,667, and the total comes out to, let me see the total here. The total comes out to 50,000, right? The total comes out to 50,000. Clear? Whether 4th step is clear to everyone, guys? Whether 4th step is clear to everyone? Yeah. I hope I'm loud and clear. I hope the screen is fairly visible to all of you. I would appreciate your confirmation. Yeah. Good. So guys, we talked about these 4 steps: step 1, step 2, step 3, step 4, right? Step 1 is identify the contract with the customer. Step 2 is the identify the performance obligation in the contract. Step 3 is determination of transaction price. When the transaction price is finalized, then we need to allocate the transaction price into the performance obligation on the basis of their standalone selling price, right? On the basis of their standalone selling price. Okay. Thanks, Thota. Thanks, Mansi. Yeah. So now coming to the step 5. What is my step 5? So guys, we have cleared that yes, this is a contract with the customer. Then we have identified the performance obligation, because this is a substance based standard, and this standard says that whatever performance obligation has been satisfied, the revenue needs to be recognized only for that, right? So step 5. What is my step 5? Recognize revenue. Recognize. Now the recognition, now the time for recognition has come. Recognize revenue at a point in time or over a period of time, right? Recognize revenue at a point in time or over a period of time, right? So generally, in case of a goods transaction, generally, I'm not saying always, I'm saying generally, okay, the revenue is recognized at a point in time. I mean to say, when the performance obligation relating to the goods have been transferred, right? So in this case, it has to be recognized at a point in time. And what is a period of time? So generally, in case of a series of services, in case of a services, the revenue has to be recognized over a period of time, right? So my dear friends, in this particular case, in case of delivering of AC unit, in case of delivery of AC unit, the revenue has to be recognized at a point in time, right? For stabilizer, it is at a point in time. Installation service, when this installation service will get completed, the revenue needs to be recognized. And for this maintenance services, of course, at a over a period of time, For example, there are 4 maintenance services, 3 maintenance services, okay? So in that case, it will be over a period of time. In this case, it is a single maintenance services. So here the revenue is at a point in time when this service will get completed or when this period get expired, right? So here it is at a point in time. Clear? So we have discussed 5 steps. Step 1, identify the contract with the customer. Step 2, identify the performance obligation in the contract. Step 3, determine the transaction price. Step 4, allocate the transaction price into the performance obligation on the basis of their standalone selling prices. Step 5, recognize revenue at a point in time or over a period of time. I have just given you an helicopter view. I will deep dive into the details of these all the 5 steps, friends. These 5 steps are not a small steps. These are very lengthy steps, and we have to cover a lot of things between these 5 steps, right? So today we will be completing step 1 and we will be touching on step 2. Okay, in the next class we will complete step 2 and moving to step 3, so on and so forth, right? So friends, but why these things are important? Why the identification of performance obligation is important? Because this is a substance-based standard and it says that nothing is free in this world, and whatever you have promised, you are taking a money for this entire package, okay? And hence you need to allocate the entire contract price into those small performance obligation. And whatever performance obligation you have satisfied or delivered, you have to recognize revenue only to that extent, okay? Now what will be the accounting entry in this particular case? Okay, so Mr. Ram is a customer and this company has sold goods to Mr. Ram for rupees 50,000 and it is on 15th March 2021. So let me put an accounting entry here, friends, for your quick reference. Financial year 2021, right? And what is the date? The date is 15th March 2021. 15th March 2021. March 15, 2021. Okay. So what is the accounting entry? Cash account debit 50,000, because 50,000 is come to revenue. Revenue has to be recognized for entire 50,000 or only to the extent of AC unit. What I need to do, guys, whether revenue has to be recognized for entire 50,000 or I need to recognize revenue for AC unit only, because till 31st March only AC unit has been delivered. What should I do? What should I do? So guys, you can see the step 4. In the step 4, what we have done, the entire transaction price is 50,000. We have allocated the transaction price into the standalone selling price of these 4 performance obligation. Into the standalone selling price of these 4 items, right? If I would have purchased these 4 items separately, I would have to pay 60,000 rupees. But since I have purchased this entire 4 item as a bucket, as a single package, so I have paid 50,000 rupees. Okay, it means I got a discount. So how have I allocated this 50,000 to these 4 goods or services on the basis of their fair values, right? On the basis of the proportionate, in the ratio of their fair values. And what is the ratio? 45:5:2:8, right? So 37,500 comes out by this formula. 50,000 multiply by 45,000 divide by 60,000, right? So here I need to recognize revenue only to the extent of 37,500, which is the allocated transaction price of air condition. 2, the remaining, where the remaining amount will go to deferred revenue, a liability in the balance sheet, to deferred revenue, right? To deferred revenue credit. The balance amount will goes to a liability, which is a deferred revenue, right? And in this particular year, only we have recognized a revenue to the extent of 37,500. What is the big difference in comparison to accounting standard here, friends? See, these Indian accounting standard or IFRS are very substance based standard. Okay, in accounting standard, we used to recognize the entire 50,000 in the first year, right? But here we are saying, friends, the dealer has only provided the AC unit. The dealer has not yet provided the stabilizer, the free service, the installation service. Okay, so and hence that will be also a cost to the dealer, which will be carried out in the next year, and hence only to the extent of goods or services delivered to the buyer, the revenue has to be recognized to that extent only, right? I hope it is clear to everyone, friends. I hope it is clear to everyone. Now, on 20th May 2021, 20th May 2021, what will be the accounting entry on 20th May 2021? The accounting entry on 20th May 2021, because the cash will not be received on 20th May 2021. So this deferred revenue will be debited. Okay, deferred revenue debit to revenue. To revenue. Revenue for what? To revenue for stabilizer and installation. Okay, and installation. So by how much amount revenue needs to be recognized for stabilizer and installation? So we have allocated 4,167 for stabilizer and 1,667 for installation. So deferred revenue will be debited by 5,833. Okay, so out of 12,500, the deferred revenue will be debited by 5,833. What is the next one? So in November 2021, the customer has availed the maintenance service as well. November 2021, 30th November 2021, right? So what will be the accounting entry on 30th November 2021? And let me put, just a minute, let me put the year as well. So let me put this 21-22 here, right? So FY 2021-2022, right? On 30th November 2021, this deferred revenue will be again debited to revenue, and revenue will be credited. By how much amount? So revenue needs to be credited for maintenance service, right? And it needs to be credited for 6,667, right? So if you see the balance of deferred revenue, so if you see in 2021, 37,500 revenue has been recognized. Okay, in 21-22, 5,833 and 6,667 revenue has been recognized. So revenue is total 50,000. And what is the closing balance of deferred revenue? 12,500 minus 5,833 minus 6,667. It becomes 0, right? So friends, with the help of this particular simple case study, I hope you have understood these 5 steps. Okay, and why these 5 steps are important, how we have recognized revenue, how we have allocated the transaction price into the various goods and services which needs to be delivered by the dealer or the seller, right? What was the objective of this exercise? We have identified, we have measured, and we have recognized, right? So with the help of this entire analysis of 5-step model and with the help of this accounting entries, I hope you guys got a fair idea about these 5 steps which needs to be carried out for the recognition of revenue. Of course, these 5 steps are very detailed step, and we have to sail through all these 5 steps one by one in detail. But just for the sake of understanding, just for the sake of a helicopter view, have we understood these 5 steps? Yeah. And why we have done this exercise? Yeah. I hope it is clear to everyone, friends. I hope it is clear to everyone. Let me know if you have any doubt. Then we'll move on to our main agenda one by one. Sairam, I have already repeated the step 4 again. Okay. Yeah, guys, I'll take a pause for 15 seconds. Jay has a very good question. Jay is asking, sir, what if customer does not avail maintenance services? Okay. For example, yes. So this is a very normal scenario, right? Generally, we forgot to take a maintenance services. So if we will not avail maintenance service, then what will happen? In that case, the dealer has to wait till the expiry of the term. For example, the customer can avail the maintenance service for a period of 2 years, right? So when this 2 year will get expired, the customer will recognize a revenue for that, right? Okay. Otherwise, since till the end of the 2 years, the customer has a right to get the maintenance service, and the dealer has to wait the revenue recognition till that point of time, right? And I still remember last year I have blocked this maintenance service for my O general AC just 1 day before this warranty got expired, or this maintenance service got expired, right? So either when the customer avail this service or when the period get expired, right? Earlier of 2. Clear, friends? Good. So Priya, in that case, the maintenance service, how this maintenance service will be treated? So of course, Priya, the revenue should be recognized for the remaining part, the deferred revenue to revenue, right? So the balance deferred revenue will goes to revenue. Clear? Good. So Mansi has briefed very beautifully these 5 steps. So Mansi has told, sir, first we need to identify the contract. Then what is there in the contract? Very good. What is there in the contract means what are the performance obligation? Okay. What needs to be delivered by the seller? What needs to be delivered by the dealer? Right. Then at what price? Very good, Mansi. So first identify the contract. Then what is there in the contract, at what price it is there in the contract, okay? And then to allocate that price, that entire package price, transaction price, into the various performance obligation, and then to recognize revenue, okay, over a period of time or at a point in time. Very good. Sairam, yes, we can say that it's a discount which was there into negotiating an entire package. Okay. So you are not required to recognize this 10,000 rupees. Okay. So Sairam, for you, for Voltas, the revenue is only 50,000 rupees. But how to allocate this 50,000 rupees into the various performance obligation? So we have just taken the fair values of the individual goods and services, and then we have allocated 50,000 into the ratio of the fair values of the individual goods and services, right? So we are not required to do anything for 10,000, right? So we have to recognize revenue to the extent what we have received, and we have received 50,000 rupees. Good. Any other doubt? No. Let's move on to the next part. Okay. So guys, always remember this thing into the mind. Okay. Revenue, contract, customer, and this helicopter view of Ind AS 115. And now we are going these step one by one. Clear? Perfect. So friends, as far as this entire chapter is concerned, of course, I'll use the institute study material so that you will have a comfort. Okay. And when you will use this study material, you can relate this video with the study material. Okay. We have discussed the scope part here. We have discussed the scope part. Okay. Definitions we have discussed, like what is meant by revenue, what is meant by contract, what is meant by customer. And when the words will come, of course, we will discuss the meaning of those words. while discussing this entire standard. Then we need to discuss the recognition. And when I say recognition, I have told you that entire transaction of the world goes into the three principles: identification, measurement, and recognition, right? So my dear friends, when I talk about recognition, so there is a 5-step model, and every revenue has to be sell through with this 5-step model for getting it recognized in the books of the accounts, right? So for every 5-step model, like step 1 is identify the contract with the customer. And when you will see on the extreme left side of the screen, so of course, the first one is criteria for recognizing a contract. We will discuss what are the criteria for recognizing a contract. Okay. When you can say that, yes, it is a contract which will come under the purview of Ind AS 115. When you can say this, okay, we will discuss that. Contract term, what is meant by a contract term and what is the significance of contract term, we will discuss this. Combining contract, we will discuss when two different contracts or when two contracts are getting combined. Okay, when two contracts are considering as a one contract, right? For example, a teacher who is teaching financial reporting as well as audit, when can you say that these two subject, the contract for these two subject has to be considered as a one contract, right? So we'll discuss contract modifications. The fourth part we will discuss when a contract has been modified. For example, earlier the contract was for 10 subject. Now the contract has been increased, or the scope of the contract has been increased for 12 subjects. Okay. So if there is a change in the contract, change in the existing contract, so how to deal with those modifications, right? So in the step 1, we'll talk about these 4 aspects. Then we'll move on to the step 2, identification of performance obligation. And in identification of performance obligation, we will discuss how to identify whether there are different goods or services, or the two performance obligation or one performance obligation. How can we identify this, right? For example, if a dealer is saying that I will deliver this electronic item at your place. For example, you have purchased a product from Amazon, right? So if you have purchased a let's say if you have purchased a television from Amazon, okay, so what do you expect? You expect the delivery at your house, okay? So what do you think, whether it is a two performance obligation from the Amazon side, for example, selling of television and delivering goods to the premises of customer, is it a two performance obligation or it's a one performance obligation? Tell me whether Amazon will recognize revenue for selling of television as a separate performance obligation and delivering of television as a separate performance obligation, or Amazon will recognize revenue when the delivery of the television will get completed. What is your view? Yes, absolutely right, Karthik. Yes. So it will recognize revenue when the delivery gets completed. It means selling of television and delivery are not two different performance obligation. This is single performance obligation, right? And the Amazon will recognize revenue only when the goods are delivered to the premises of the buyer. Okay. So this is an ancillary service. Okay. This selling and delivery are not two different services. This is single performance obligation. I'm saying single performance obligation. Amazon has to deliver the goods at the premises of the buyer, right? For example, you are buying a product from Vijay Sales, okay? So when you are buying a product from Vijay Sales, and when the Vijay Sales pack this television and deliver it to you in your car, in that case the obligation of Vijay Sales gets completed and Vijay Sales can recognize revenue. Okay, so Priya, delivery of television, that is not a business of delivery. Okay, so Amazon does not have a business of delivery. Amazon has a business of selling goods. Okay, but they are providing goods to the premises of the customer. Okay, so it is in the ordinary course of their business. Okay, and hence their obligation will get completed when the goods are delivered to the buyer. Okay. For example, if the goods are stolen in between or the goods are damaged in between, then the ownership is on the Amazon, not on the buyer. Okay. Right. So friends, in the step 2, we will discuss what are the promises, what are the goods or services, how these goods or services can be considered as a different goods or services. Then we will discuss what are the long-term arrangements. We discuss about consignment arrangement. If there is a consigner-consignee relationship, then how this revenue is going to be recognized, and when we can say that performance obligation has been completed. If a consigner has sent the goods to the consignee, can I say that my performance obligation has been completed? So we will discuss that. Principal versus agent consideration. Okay. So while recognizing a revenue, it is important to note that am I acting as a principal or am I acting as an agent? Okay. For example, Make My Trip. You all have used the website Make My Trip, right? So you must have booked a flight ticket from Make My Trip. So if Make My Trip is booking a flight ticket from Air India, so here Make My Trip is charging a fare. Apart from the fare, Make My Trip is charging a convenience fee, right, or a commission. So in this case, Make My Trip is acting as an agent, and Make My Trip revenue is only that convenience fee or commission. But for Air India, the revenue is the sale of ticket, right? Is the amount of ticket. So it is important to understand, are we acting as a principal or are we acting as an agent for recognition of revenue? Of course, we will discuss this thing later on while discussing step 2. Non-refundable upfront fee. For example, when you are taking admission in some classes, so the coaching center will say, or let's say the educational institution will say, we will take 10,000 rupees as a non-refundable fee. Okay. And you have to pay us upfront. And the remaining 2 lakh or 3 lakh rupees you will pay later on. Okay. So guys, what will be the treatment of this non-refundable upfront fee? Whether it will be treated as a separate performance obligation, okay, or when we are getting this non-refundable upfront fee, we need to recognize revenue upfront, or we should not recognize the revenue upfront. Of course, we'll discuss this thing later on, right? Then in the step 3, determination of transaction price, in the middle of this particular slide, okay, or in this particular study material, determination of transaction price, we will discuss variable consideration. So we'll discuss the variable consideration thing. Okay. Then we will discuss the existence of significant financing component. Okay. If there is an existence of significant financing component, for example, the customer is paying after 1 year or after 2 years. So of course there is a cost to the time. There is a cost of time as well. So time value of money is again very important. So I am a vendor, I am a dealer, I am selling a goods to a customer for 10 rupees, but the customer is saying that I'll pay you after 2 years. So probably I will sell this goods to the customer at 15 rupees. So of course there is a significant financing component which exists, right? So how to deal with this significant financing component? Is it a revenue or is it a finance income? We will discuss that, right? Non-cash consideration. Okay. A dealer is selling some goods, an entity is selling some goods, but the entity is not receiving money. The entity is getting some other item, some non-cash consideration. So how to deal with this non-cash consideration? At what value the revenue will be recognized? What should be the transaction price, right? Consideration payable to a customer. Okay. In the FMCG business, generally the FMCG companies are also paying some consideration to the customer. Okay. I'll discuss, of course, we'll discuss this thing later on. So if there is a consideration payable to a customer, I am paying to my customer. Although customer used to pay me and he is paying me, but I am also paying him. So what should be the treatment when an entity pays some consideration to their customers, right? So step 3, we will discuss these items in detail. In step 4, while allocation of transaction price to performance obligation, we will discuss the methods of allocating transaction price. What could be the different methods by which the transaction price can be allocated to the separate performance obligations. Okay. We will discuss if there is a discount, how to allocate a discount. We will discuss if there is a variable consideration. Okay. There is a variable consideration, how to allocate that variable consideration. and we will discuss if over the period, if there is a change in transaction price, how to deal with the change in transaction price. In the last step, which is a satisfaction of performance obligation. What is meant by satisfaction of performance obligation? When the performance obligation will get satisfied, we need to recognize revenue. Now the revenue recognition could be at a point in time or over a period of time. So we will discuss when the performance obligation satisfies over a time, we have to recognize revenue over a time. When the performance obligation satisfied at a point in time, we will recognize revenue at a point in time. We will discuss what are the ways by which we can measure the progress towards complete satisfaction of performance obligation. Okay. So my dear friends, as I told you that this is the single standard which talks about the entire revenue recognition, and there is no separate standard for construction contracts. So here we will also discuss what is meant by contract cost, right? What is the incremental cost, fulfillment cost? We will discuss that. We'll touch upon the presentation and disclosure, and we will also discuss one of the appendix of Ind AS 115, which is service concession arrangements, right? So we'll discuss that part also. So my dear friends, I hope you guys are clear on the overview of this particular standard, right? So I'll take a pause for 15 seconds and I'll look at your query. If you have any query, we'll discuss. Otherwise, we'll move on. Guys, I hope you are comfortable so far. You are able to understand what I'm trying to convey, right? Right, friends? Please let me know if you have any query. Okay. So let me move on to my next part. And let me share my screen as far as my PowerPoint presentation is concerned. So we have discussed the scope, friends. We have discussed the agenda of this particular standard, and while discussing the agenda of this particular standard, I have told you that these 5 steps are the heart of this particular standard, this entire standard, and we will deep diving into these 5 steps to make this standard more clear, right? The first step 1, identify the contract with the customer. Step 2, identify the performance obligation in the contract. Step 3, determination of transaction price. Step 4, allocate the transaction price to the performance obligation. Step 5, recognize revenue when each performance obligation is satisfied, is at a point in time or at a period over time. So my dear friends, if you have to have a command over this standard, first of all, you just need to have a helicopter view of this particular standard with the help of this Voltas air condition example. This is the simplest example which I have taken so that you will be able to remember this example always, right? Because everyone is having an air condition in their houses, okay, or everyone has an air condition in the offices. So this is something which is relating to your life as well, right? So friends, just think about that example and you will be able to demonstrate these 5 steps. Okay, we need to identify the contract, we need to see what is there in the contract, what needs to be delivered, right? So I mean to say performance obligation. Then what is the price, total price? Then it is a transaction price. Then we need to discuss how this total price has to be allocated between the different performance obligation. Why allocation is important? Because revenue needs to be recognized when the performance obligation will get satisfied. So you have seen that I have put an accounting entry on 15th March 21 for AC. Then I have put in an accounting entry for stabilizer and installation service at 20th May 2021. Then I have put in an accounting entry for maintenance service in November 2021, right? And hence, if you have to recognize revenue by substance, I mean to say when the performance obligation will get satisfied, of course, you need to have a value for that. And for getting a value, you need to allocate the entire transaction price into the different performance obligation. Okay. And of course, friends, you need to recognize revenue when each performance obligation is satisfied. For example, in our helicopter view example, we have not recognized revenue for stabilizer, installation, and maintenance service in financial year 2021, right? So the amount which we have received in excess, we have recognized that amount as a liability, as a deferred revenue, right? And when this performance obligation were getting satisfied, we have, So in that case, we have recognized revenue for those performance obligation, and we have debited deferred revenue. Clear? Great. Yeah. So now we are moving on to our first step. Step one, identify the contract with the customer. Okay. And for identifying whether it is a contract with the customer, so one thing is very important. We need to understand whether agreement is a contract or contract is an agreement. Okay. So every agreement is not a contract, but for every contract, there must be an agreement, right? So what is a contract? A contract is defined as an agreement between two or more parties that creates enforceable rights and obligation, right? That creates enforceable rights and obligation. So guys, if something which does not create a enforceable rights and obligation, it is not a contract. Voluntary, I'm doing some charity, right? I'm not taking any money. Voluntary, I'm doing some charity. It is not creating a enforceable rights and obligation if I'll not do charity. Okay. But if I have purchased some goods and if I'll not pay money, of course, it will create a enforceable rights and obligation. The dealer can sue me in a court of law for recovery of money for which the goods have been provided to me, right? So contract is an agreement between two or more parties that creates enforceable rights and obligation. So one of the participant was asking, sir, whether a contract could be an oral contract. Yes, a contract could be a written contract, an oral contract, or an implied contract, right? So friends, it will depend upon your business practice as well. Okay. So of course, generally the contracts are written contract, right? But the contracts could be oral contract as well as implied contract as well. For example, in IT services or in IT companies, okay. So you are calling for availing some customer services, right? So when you are calling for customer services, the customer care person will ask you some details, okay. When you are saying yes, 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 okay, he is asking for your mobile number, he is asking for your, let's say, a dedicated ID, he is asking for some passcode. So whenever you are providing those details to the customer care guys or to the company, it means that company and you have entered into a contract. Also, of course, it's an oral contract, but it's a business practice of the company. When you are providing this detail and when he is verifying the detail and he is saying, okay, then I'm proceeding it. Okay. So it means you guys are entering into a contract. Okay. And hence it is a contract which creates an enforceable rights and obligation. For example, I'll take a classic example between myself and HDFC Bank, right? So I am holding a saving account in HDFC Bank, and I am also holding a Regalia credit card of HDFC Bank, right? So friends, I still remember that 3 years back, I got a call from HDFC Bank customer care or HDFC Bank person, and he told me that, Mr. Alok, we have a jumbo loan offer for you. We have a jumbo loan offer for you, right? I said, okay, fair enough. And they told me that we will give you 5 lakh rupees on the basis of your credit card. I said, very good. And so that time I was in the need of a money, and I asked him, what will be the rate of interest? So they had told me, and he had told me that you will be happy to hear that we are providing you this loan at a concessional rate of interest, and the rate of interest is only 6% because today there is an offer for you. Okay. I told, very good. Okay. So then I asked him that how can I proceed for availing this loan facility? Okay. Then he told me that, you know, you have to come on a call, or of course you can continue this call and I'll ask you some details. Okay. After verifying those details, I'll send a unique ID number, or let's say a OTP on your mobile. And when you put this OTP, this number, this 4-digit number onto your mobile, so your loan will get processed, right? What does it mean? So this is only a verbal communication. Okay. So I have told my mobile number, I have told my customer ID, he has verified the details, and then he asked for my address. I told him my address. Okay. Then he generated a 4-digit passcode. and then that passcode comes on, OTP comes onto my mobile, and I put that OTP into my mobile, okay, into that IVR thing, okay. So when I put that IVR, when I put that OTP into IVR, then he told that, okay, you have given your consent and we are processing your loan. So if I'll not pay that loan, or if I'll deny for that loan, right? Even after processing, I'll deny processing fees or let's say charges for that loan. Can HDFC Bank sue me for the recovery? Answer is yes. HDFC can enforce me for my obligation, right? But sir, there was no written contract. So guys, this is an oral contract, verbal contract, or implied contract as per the customary business practice of this kind of business, and hence it will be tantamount as an enforceable contract, right? Understood? I hope it is clear to everyone. Yeah, and I'm sure at least few of you have also availed a loan or have also heard about this thing, right? Is it clear, Priya? Is it clear, Sairam, Mansi, Karthik, Jay, Thota? Is it clear to everyone? Tanushri? Right? I hope it is clear to everyone, guys. I would appreciate your confirmation. Yeah, thanks for confirming. So friends, a contract is defined as an agreement between two or more parties that creates enforceable rights and obligation. A contract can be written, can be oral, or can be implied, but it must meet specific criteria. What are those specific criteria? We will discuss these 5 criteria, okay? So these all criteria needs to be satisfied. A contract exists if all these criteria will be satisfied, okay? A contract does not exist if both the parties can cancel without penalty, okay? For example, I am a chartered accountant and I have entered into a contract with my customer who is my client, and my job is to file GST returns on a quarterly basis, and his job is to pay me the money, okay? So we both are okay to walk away from the contract without paying any penalty. Even though if I'll not file any GST return, there is no clause, there is no penalty clause which enforce me to perform my duties or obligation, right? There is no any penalty clause, right? So my dear friends, if there is no any penalty clause, or both the parties can cancel the contract, walk away from the contract without paying any penalty, it means there is no enforceable rights and obligation, and hence we can say that the contract does not exist as per Ind AS 115, right? So first of all, it can be written, it can be oral or implied, and the contract must exist if there is some penalty clause, or if there is something which bound those parties to perform their obligations, right? Good. Now, for having a contract exist as per Ind AS 115, when you can say that yes, this is a contract as per Ind AS 115, these 5 conditions needs to be satisfied. And what are those 5 conditions? These 5 conditions are: parties have approved the contract and are committed to perform. Okay. First of all, the parties must have approved the contract. So approval is important. In my case, when I am dealing with the HDFC Bank, when I have given my all the details, when I put the OTP into IVR, so of course I am given my consent. I have given my consent. It means the contract have been approved and the parties are committed to perform. Okay. When the parties are signing the contract, of course they have approved the contract. We can say that. So first, the contract should be approved and it should be committed to perform. Sir, is it always on the paper? Even though you can see that in our business kind of services, in our consulting services, we are writing a mail to the client. Okay. For example, just a few days back, I was dealing with a consultant in my company, and the consultant told me that I'll charge 50,000 rupees for this particular services, and I need that services urgently. So I told customer that please, I told my consultant that please put this thing into the mail, okay, and I'll confirm that over the mail. Okay. So he has put that thing on the mail that I'll deliver this service by tomorrow and I'll charge 50,000 rupees for this particular service. And I said, okay, we are ready to pay you 50,000 rupees for this kind of services. So it means we have bounded. So it means this contract have been approved and he can enforce me. If I'll not pay him 50,000 rupees, with the help of this mail, he can enforce me by paying me 50,000 rupees within a court of law, right? I hope it is clear to everyone, guys. Each party's rights are identifiable. Okay, so a contract as per Ind AS 115 exists. If we can say that each party rights are identifiable, I know that I have to file GST return. He knows that he has to provide me the documents and he has to pay me the consideration. Okay, each party's payment terms are identifiable. Okay, so the payment terms should be identifiable, whether I should take a 50% advance, whether I should raise invoice after delivering after 15 days from the services. Okay, so each party's payment terms are identifiable. Contract has a commercial substance. What does it mean? Okay, so the contract should have a commercial substance. For example, there is a exchange between the two parties which are into the similar business. It means the contract does not have any commercial substance. Okay, so I am selling goods to X and X is selling goods to me and we are having the same goods. Okay, it means we are just inflating our revenue and cost, right? So this does not have any commercial substance. Okay, so when we can say that the contract has a commercial substance, when there is an exchange of different goods or services. Okay, when there is an exchange of non-similar goods or services, DLF is selling building to the Mercedes, and in return of selling building to the Mercedes, Mercedes is selling car to DLF, right? So of course this property and this car is having a two different thing. These are the two different goods. Okay, two different services. These are having different uses. Okay, and hence we can say that even in this case this contract has a commercial substance, right? It is probable. The fifth step. So we discussed point number 1. Yeah, point number 2, point number 3, point number 4. Fifth step, very important. It is probable that the entity will collect the consideration it is entitled to in exchange for the transfer of goods or services to the customer, right? So it is probable that the entity will collect the consideration, and hence, and the fifth step is the probability should be there that the entity will collect the consideration, right, which it is entitled to in exchange for the considered transfer of goods or services to the customer. It is probable. It means if I'm dealing with a customer who is bankrupt and there is no probability for recovery, can I say that it is a contract for with the customer? I cannot say that this is a contract with the customer until and unless the probability of recovery will be there. And if you remember the definition of the customer, we have told you customer is a party who obtains goods or services which is an outcome of the entity's ordinary course of business in exchange for a consideration. If the consideration is not probable, that is not a contract within a purview of Ind AS 115. Right, guys? So we have discussed 5 important steps. We have discussed the 5 characteristics of a contract to become a contract with customer to be covered in the purview of Ind AS 115. So friends, it's 8:33 right now. Let's have a 10 minutes break and we will start at 8:45, right? Let's have a 10 minutes break. Clear? First of all, let me look at the query box. One of the student is asking, sir, please inform when is the next class, morning or evening. So as far as the financial reporting class is concerned, the second session of Ind AS 115 will be held on 24th of February, and it is in the morning, same time, 7 to 10 a.m. right? So the second session will be day after tomorrow, 7 to 10 a.m. in the morning, right? So friends, we were talking about the step one, identification of the contract with the customer, and we have discussed a contract is a contract to be covered as a contract within the purview of Ind AS 115. It should be enforceable at a court of law. I mean to say, a contract is an agreement which is between the two parties and which can create rights and obligation between the parties, right? Which can enforce the rights and obligation between the parties. And it would be great if the participant would confirm that I'm clear and loud and my screen is also visible fairly. Okay, thanks for the confirmation. Yeah. And my dear friends, so the contract will be applicable, or we can say that the contract will be considered as an enforceable rights and obligation only then if there is some enforceability clause will be there, like some penalty clause will be there. If the penalty clause is not there and any party can walk away from the contract at any point of time without paying any penalty, in that case we cannot say that this contract carries a feature of enforceable rights and obligation. And we have discussed that there are 5 conditions which needs to be met for being a contract as a contract with customer under 115. First, there must be approval. Parties must have approved the contract. Each party's rights are identifiable. If you think about a layman person, you can think of course, first approval is there. Okay, you come to me and I told you that, yes, I'll teach you FR. Okay. So first of all, there must be a approval that yes, between this to this time, I'll teach you FR. I'll take 50 classes. I'll charge, let's say 50,000 rupees, right? So first of all, approval is there. The second, the rights are identifiable. You have to come in time, okay, and you have to come with your pen, paper and copies, right? And I'll teach you, you have to listen me and you have to pay me, right? So each payment terms are identifiable. Contract has commercial substance. Of course, this has a commercial substance, and it is probable that you will pay me. Although in these kind of setup, so generally these educational institutions are charging money in advance, right? So there must be probability that the entity will collect the consideration. If the entity will not be able to collect the consideration, then there is no point of recognition of revenue, right? Now, standard has given you guidance about the collectibility criteria. This collectibility criteria is very important. For example, if I'm dealing with a customer who becomes bankrupt, okay. For example, I'm dealing with Reliance Communication. Okay, you all are aware that Reliance Communication is already insolvent. Okay, and they are going through the IRP process, right? So if I am a consultant and I have entered into a contract with Reliance Communication, okay, and I know that this company become insolvent and they are running into cash crisis. Okay, they are running into the cash crisis. So it means this company does not have an intent or ability. So when you can say that the collectibility criteria is missing, so you can say that the collectibility criteria is missing if there is intent and ability is not there. So one, intent is not there. For example, I'm dealing with Dawood Ibrahim. Okay, so he's a gangster. I'm providing him some services and I know the background that he is not paying the money and I'm not in a position to not deliver the service. So I have to deliver the service. Okay. So he is able to pay me the money, but his intent is not to pay me the money. Are you getting me? Are you getting me? So I have to complete my performance obligation, right? Because I don't have any choice. And he is able to pay me the money. I cannot say that, no, he is not competent to pay me the money. He is competent to pay me the money, but he does not have any intent to pay me the money. Okay, it means that it means the intention is missing here. Okay, so when the intention and ability is missing, we cannot say that the collectibility criteria is getting satisfied. Okay, and in that case, even though I have satisfied the performance obligation, I cannot recognize the revenue till the time the intent and ability would be there and the collectibility criteria will become certain. Right. The second example, there is a bankrupt or insolvent company. The intent is there. We know the background. We know that this company has obeyed all the payment obligation of its vendor and suppliers, right, or its employees. We know the intent is there, but the ability is not there. The company does not have sufficient cash to pay off its dues, right? The company is not generating any money from the operation. The company does not have any credit lines. The company does not have any surplus cash. The promoters are not willing to contribute in the company. Okay, the company is not able to raise fund from the market because the credit rating is very low. So in this case, the intent is there, but the ability is not there. So my dear friends, the standard says that if the collectibility criteria, if the collection is not probable, you cannot recognize revenue, or you can recognize revenue only to the extent the collection is probable. Second example, you know, when this Uber come into the Indian market just 7 or 8 or 9 years ago, you know, so Uber when come into the Indian market, Uber, Ola. So Uber has distributed, a lot of rides free of cost. I still remember just 9 years ago, I was using a lot of coupons, and I was traveling from Delhi to Gurgaon on almost free of cost on daily basis. Okay, so they distributed like anything, free of cost. So when this Uber comes into the Indian market, or when any company who is coming to the new market, okay, and they are selling some products or services, they are providing some services, okay, so they are aware that they will experience some difficulties, okay, in the recovery of the entire money. And I still remember at that point of time, some of guys were there in my office. What they used to do, for example, they are having a ride from Uber or Ola, right? So there was an option. For example, they have a ride for 200 rupees and they don't want to pay the money. So they have an option that they will say that I will. So when at the rating column comes, when that rating box comes, so they will provide a poor rating to the driver, and they will write that, okay, this driver has taken a longer route, and this driver has kept me waiting for a long, and this driver is this, that, I'm not happy with the service, blah 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 blah, so that the Uber will refund the money, right? And by doing this act, they got a lot of refund. Okay, so what I'm trying to make you guys understand here, when the companies are launching some product or services into the new market, so they are experiencing some difficulties. Okay, probably they are not getting the same price which they are expecting to receive, right? For example, they have launched a product at 50 rupees, and although it was a new market, new experience was there, and they are expecting, okay, although the price is 50 rupees, but due to the experience they are expecting, okay, I'll not be able to get 50, I'll be able to get 30 rupees. Okay, so in this case, the amount which is probable to recover, the amount which is probable to collectible, is considered as a revenue. So that amount needs to be taken into consideration as a contract with customer. That amount needs to be taken as a contract, needs to be taken as a consideration as a transaction price, and that amount needs to be recognized as a revenue. The total amount should not be recognized as a revenue till the time it becomes collectible, right? I hope you guys have understood, friends. So let's have an example on collectibility criteria, then we'll move on to the example of institute study material as well. An entity sells 1000 units of a prescription drug, of a medicine, which is to a customer for a promised consideration of rupees 10 lakh. CU is currency unit, right? So 1000 unit of a medicine and for 10 lakh rupees. This is the entity's first sale to a customer in a new region experiencing significant economic difficulty, and the entity expects that it will not be able to collect the full amount of promised consideration. This was the first sale, and of course they were experiencing some difficulty. Okay, they have to remain in the market, they have to obey the customer, so they have to, you know, they are aware that they will not be able to collect the entire 10 lakh rupees, right? The entity determines that it expects to provide a price concession and accepts a lower amount of consideration from the customer. The entity expects to be entitled to rupees 4 lakh. So the entity is expecting that yes, we are not able to recover this entire 10 lakh rupees. We are only able to recover 4 lakh rupees, right? We have to give some hefty discounts to the customers, right? The entity consider the customer ability and intention to pay the estimated consideration, which is 4 lakh, and concludes that even though the region is experiencing economic difficulty, it is probable that it will collect rupees 4 lakh from the customer, right? So my dear friends, in this case, although the transaction price is 10 lakh rupees, but this company is expecting the recovery, which is collectible, of 4 lakh rupees only. So in this case, the revenue has to be recognized for 4 lakh rupees, not 10 lakh rupees. Why? Because as of now, we are expecting 4 lakh rupees. Sir, what happens if tomorrow there will be some development and tomorrow we can say that no, it is not 4 lakh, it is 6 lakh. Of course, at that point of time, we will update this 4 to 6 and we will recognize the revenue to the extent of 6 lakh rupees. Right? Clear? Sir, for example, we have received a money in advance. Okay. For example, we have to deliver something. So have you heard about that? You know, Vistara Airlines has ordered some Boeing planes from USA, or Indian government has ordered some fighter planes from Russia or France. Have you heard that? So guys, when we are entering into these kind of contracts, we are paying advances to the supplier or manufacturer, right? Because it has to incur a huge cost. So when we are incurring into such kind of contract and when we are paying advances to the supplier or manufacturer, so from the supplier or manufacturer side, at the time when I'm getting a money, because you will say that, sir, you were talking about the collectibility of the consideration. Here you got the full money in advance, then go and recognize the revenue. In that case, you have to remember the second step, identification of performance obligation. And what is the fifth step? Satisfaction of performance obligation. Although you got the money, but you have not performed your part. Okay. So even though going by these 5 steps, what was your duty? You have not performed that, and hence you cannot recognize the revenue. Okay. Sir, then what to do? In that case, the advance which you have received from the customer, you have to show it as a liability till the time you will not satisfy the performance obligation. Right? Clear? Now we are coming to the first example of institute study material. Okay, so that you will be more comfortable while looking at the institute study material, because this is something which you always refer to prepare for your examination, right? So good guys, I have received 3-4 confirmations from the students that everything is clear. Okay, good friends, I'm happy to hear that. And I would request participants that please raise your queries. If you have any queries, doesn't matter, please raise your queries. Okay, so that your query will help and will benefit all other students and participants as well, who are listening this video right now or who will listen this video on YouTube later on, right? Again, the same kind of example, but just for the sake of revision, I'll quickly take this example. New Way Limited decides to enter into a new market that is currently experiencing economic difficulty and expect that in future economy will improve. New Way enters into an arrangement with a customer in the new region for networking products for promised consideration of 1.25 lakhs. Sorry, 12.5 lakhs, 12 lakh 50,000. At contract inception, New Way expects that it may not be able to collect the full amount from the customer. Determine how New Way will recognize this transaction. So friends, we are assuming out of the 5 steps, we are saying that, okay, this contract has been approved. The rights are identifiable. The payment term is identifiable because it was 12,50,000. The contract has commercial substance because one has to deliver some goods and services and the other party being a customer has to pay. But the 5th one is there must be a probability that the entity will collect the consideration it entitles to. So here it is experiencing the difficulty to collect the full amount. So what we should do, whether we should recognize entire 12,50,000 or less than 12,50,000. So hence, in this case, the 5th condition say that whatever amount is collectible, you are expecting that this sort of money will be collectible. You have to recognize revenue only till that extent, okay, not beyond that, right? So what is the solution? Assuming the contract meets the other criteria covered within the scope of the model in Ind AS 115, New Way need to assess whether collectibility is probable, right? In making this assessment, New Way consider whether the customer has the ability and intent to pay the estimated transaction price, which may be an amount less than the contract price. For example, 9 lakh, 8 lakh, 6 lakh rupees, okay? So students, while showing you the solution here, I want to tell you one thing from my industry experiences, right? Of course, examination is important. Once you crack the exam, you will become a chartered accountant. Once you become a chartered accountant, you will work in the industry like a chartered accountant, okay? So students, the expectation of ICAI as far as examination is concerned is not straightforward that there is a numerical and you just need to solve that numerical, right? That is not the only expectation. The expectation from a CA final student is you should have an analytical bent of mind, right? You should be able to analyze the things. If I can show you this particular illustration, so this particular illustration does not require any numerical calculation, right? But this this illustration requires a practical application of the concept which is there in Ind AS 115, step 1, right? If you are not well versed with the concept of the standard, you will not be able to perform exam in your examination as well as in your practical life, right? So even if you are into a consulting practice or you are into industry, you should have that practical or analytical bent of mind where you can apply the concept of the standards into a practical things, into a practical case study. And these kind of small questions could be a part of the bigger question in your examination, and hence you should be more focused about the concepts, okay? It should not be the way that you are only revising the numerical things, of course, that you need to do. That is part and parcel of your preparation. But of course, these kind of case studies, just brushing up these kind of concept, relating with these kind of concept is again very important, right? I hope you guys have understood, okay? So I can tell this thing with my 3 kind of experiences, like my 15 years before I was a student. So I cracked this CA final 15 years ago. Okay, when I was student, so of course I had this kind of view. Then I become a teacher, and I'm also working into industry, and I have also acted as an auditor. So in my forefront of roles, I can say that this kind of perspective is very important in life, being a CA final student. Yeah. Concept of commercial substance we have discussed, that commercial substance should be important, okay? So it should not be like the entities are exchanging the goods of a similar nature. There are 2 Louis Philippi outlet, okay? Like I have purchased and I have just taken a franchisee of Louis Philippi outlet, and my friend has also taken a franchisee of Louis Philippi outlet, okay? And I have to take a loan, or he has to take a loan. So the requirement of the banker is you must have a revenue of 1 crore rupees. And I have a top line of 90 lakh rupees. So we have entered into an arrangement that you have to sell just these Louis Philippi garments to me, and I'll sell to you, okay? So just we are exchanging these garments, okay? And we are just raising the invoices to each other. Does this transaction have a commercial substance? this transaction does not have any commercial substance. Okay, and we are only inflating revenue. We are just creating artificial revenue. Okay, just for the sake of meeting the requirement of my banker so that I'll get a loan, right? So this commercial substance is very important. Okay, what is a commercial substance? When you are exchanging a different goods or services, when the risk, timing, or amount of the cash flow from these different goods or services are different, right? So the transaction should have a meaning, should have a commercial viability, commercial meaning, right? Okay, there are two friends. One friend is saying just you need to taught me the consolidation and I'll teach you Ind AS 115. This transaction does not have a commercial substance, right? Coming to the contract term, of course, for any contract there must be a contract term, right? Okay, so you cannot say if I'll tell you that I'll teach you, then your second question will be, sir, what will be the timing? Sir, what will be the duration? How many classes? See, I have only told you that I'll teach you financial reporting, and you have asked me 3-4 questions, and just think about those 3-4 questions. Sir, how many classes? Sir, what is the duration? Right, right. Sir, what will be the term? Okay, right. When you go for a gym, okay, or when you go for a yoga, the trainer will say that I'll take 50,000 rupees for 12 months. For 12 months. So this for 12 months is again a very important thing. Okay, and the trainer is saying for the first 3 months and for the 6 months, first 6 months, you cannot cancel this contract. So whatever amount you have paid, so 3 months amount is mandatory, and beyond 3 months it is up to you. If you want to avail this thing, you can avail, otherwise you can just walk away from the contract. So friends, for having for just looking at whether it is a contract with the customer, the contract term is again very important, because it is something on the basis of which you will recognize a revenue. Okay, so again, contract term is something to which the contract can be enforceable, and there must be some penalty clause, right? Example, service provider enters into a contract with a customer to provide monthly services for a 3-year period. Okay, so this should be a monthly service for a 3-year period. Each party can terminate the contract at the end of any month for any reason without compensating the other party. That is, there is no penalty for terminating the early contract. So although the contract period is for 3 years, but can we say it is a contract term? Because there is a monthly service, and at the end of each month, the party can walk away from the contract and there is no penalty. So in this case, every month is a contract term, and when 1 month will get completed, the revenue will be recognized on a month-to-month basis. The revenue will be recognized for that particular month. For the second month, the revenue will be recognized. And for example, after 2 months, either of the party has walked away from the contract, then the revenue recognition will get stopped, right? So this is what is a contract term? The contract term is on a month-on-month basis, right? So the contract should be treated as a month-on-month contract despite the 3-year stated term. The parties do not have enforceable rights and obligations beyond the month of services already provided. Okay, so the party can sue for the service provided if the other party will not pay the money, right? But one of the service provider cannot sue for the remaining term of the contract, right? So what is a contract term? Contract term is a period over the which the parties can enforce the rights and obligation from each other, right? So I have some questions, so I'll take those questions, then I'll move forward. Sairam is asking, sir, what is the treatment when customer not accept the goods or services because the customer is not satisfied? So Sairam, this I'll take when I'll teach you performance obligation, right? So if the customer is not satisfied, but right away, if the customer is not satisfied, for example, when you are buying goods from Amazon, okay, so there was a time period, 15-day delivery, right? Or 30 days delivery. So Amazon or Flipkart will not recognize revenue till the time this return period is over. Okay, and what is this return period? The return period is a period during which the customer can return the goods to the supplier or manufacturer, right? So once this period get expired, then the entity will recognize the revenue, or when the customer will provide the assent or consent that yes, I'm happy with the goods, okay, and I'll use these goods, right? So Sairam, you need to see the contract. If the customer is not satisfied and he has a right to return or refund the goods, in that case the revenue should not be recognized till the time the customer will not accept the goods or the time period of acceptance has not been expired, right? Priya is asking, sir, someone has the ability but not the intent to pay, or has the intent but to pay, then in both the cases collectibility criteria doesn't meet, right? Yes, Priya, you are absolutely right, right? Mr. Thota is saying, sir, answer is not clear because in the question itself it had already mentioned new way expects it may not be able to collect and simply it will not recognize, but in the answer it is saying that it will make assessment of collectibility. Is it confusing, sir? Please clarify. Mr. Thota, I'll again show you this example on the screen. If you will see this example carefully, it says that the new way expect that it may not be able to collect the full amount. Okay, it is not saying that it will not be able to collect the amount. Again, I'm not going by the words, I'm going by the concept. If it would have been written that the company will not be able to collect the amount, in that case the revenue should not be recognized. But of course the new way has to assess the collectibility criteria. Today it is not realizable, not recoverable. Probably tomorrow it will be recoverable, right? Tomorrow it will be recoverable. I'll take a classic example, guys. Vodafone Idea Limited, you must have seen the balance sheet of Vodafone Idea Limited, or you must have heard about Vodafone Idea Limited. Today the share price of Vodafone Idea Limited is around 12 rupees. Just 2 years back there was a time when this share price was, dropped to 2.5 rupees or 3 rupees, right? So Vodafone was having a very highly financial difficulty. Okay, so the ability to pay was not there. But for example, the government has just come into the picture and the promoter has funded the company. So there was a funding which come from the outside, which come from the promoter. So in this case, yesterday the ability was not there, but today the ability came. Okay, so your assessment will go on, your assessment will continue, okay, regarding the collectibility criteria. And whenever it is collectible, whatever it is collectible, that will be recognized as a revenue. Understood, guys? Is it understood? So guys, when you see this practically in the practical life, there are a lot of, there are a lot of estimations, there are a lot of business scenarios which needs to be taken into consideration for recognition of revenue as far as collectibility criteria is concerned, right? So Mr. Thota, I think it is clear now. Sairam is asking, sir, if a company is having the multiple branches, there is transferring the goods between the inter branches with margin, can we record revenue for that transaction? Sairam, it is not a within branches, it is not a revenue. Okay, so revenue, what is a revenue? Revenue is a sale of goods or services within the ordinary course of business. So if there are different branches, it means a company is selling goods to himself, to itself, right? So that is not a revenue, right? That is an artificial inflation of revenue. For a branch, just for the controlling purposes, in the branch books, so one branch is recognizing revenue, another branch is recognizing a cost, but at a company level. So when I'm talking about the standard, guys, standard is not on a branches level, it's at a company level, right? So when I'm presenting the P&L account of my company, how does it look like? For monitoring purposes, for MIS purposes, probably I am just recording the revenue just to showing the performance of my branch. For example, in real life, in practical industry, there are 4 branches, right? And there was a chartered accountant who are heading these kind of branches, right, as a financial controller. So of course that chartered accountant will show the company, see, if my branch has sold goods worth rupees 10,000 crores, Then second one will say my branch has sold goods worth 5,000 crores. But when I'm preparing the P&L of the company, these intercompany transactions will get eliminated, right? Okay, so these transactions will not hold good at the time of finalizing of the company's P&L. I hope you have understood. Jay is asking, assessment of collectibility has to be done quarterly or yearly. Jay, the frequency has not been given. Generally, you have to assess the collectibility at the time of finalization of books of accounts or at the time of closing your books of accounts. It could be quarterly. For example, if you are a listed company, of course, you have to publish your results on a quarterly basis. So it has to be quarterly, okay, so that you will reflect the right picture to the stakeholders. If you are a private limited companies, okay, and you have to, you have to submit your books of accounts on a yearly basis to the regulators, to the stakeholders, probably it could be yearly as well. But you need to see from the regulatory perspective as well, like tax implications as well. If there are tax implications which has to be, obeyed on a monthly basis, of course, you need to see this collectibility criteria on a monthly basis, right? Okay, Mr. Thota, thank you so much for your feedback. Yeah, good. So I would request all the students and participants, not in my lecture, but every time just read the question properly, okay? And just think about the concept. If your concept is strong, then everything will be all right. Right, guys? Perfect. Yeah, so coming to the contract term, and let's look at this case study from the Institute study material. A gymnasium enters into a contract with a new member to provide access to its gym for a 12-month period at 4,500 rupees per month. The member can cancel his or her membership without penalty after 3 months. Okay, it means what is the enforceable term? So the membership can be cancelled after 3 months. Okay, the member can cancel his or her membership without penalty after 3 months. So if he or she has to cancel within 3 months, he or she has to pay a penalty, but beyond 3 months, he or she does not require to pay any penalty. It means beyond 3 months, the contract does not have any enforceable rights, enforceable obligation, right? So in this case, the contract term will be considered as for 3 months, and going forward, whenever the customer will avail the services, so it will be like a month-on-month basis, and the revenue will be recognized on a month-on-month basis, right? Coming to the illustration 3, contractor P enters into a manufacturing contract to produce 100 specialized CCTV cameras for customer Q for a fixed price of rupees 1,000 per sensor, right? Customer Q can cancel the contract without penalty after receiving 10 CCTV cameras. So till the time he does not receive 10 cameras, he cannot cancel the contract. But after receiving the 10 CCTV cameras, he can cancel the contract without penalty. So in this case, the contracted quantity is 10 quantity, not the entire 100 quantities, okay? And the 90 quantities, of course, the revenue could be recognized for the 10 quantities, but for the 90 quantities, the revenue will be recognized when the performance obligation will get satisfied, right? So in this case, the contract will be considered only for 10 units, because what is a contract? It's an agreement which can create enforceable rights and obligation, right? So guys, we have covered the identify the contract with customer first part. Now we are discussing two things. When two different contracts can be combined as a one contract, okay, as far as revenue recognition and measurement is concerned. Second, we will discuss if there is a change in the scope of the contract, if there is a change in the consideration of the contract, if there is a modification, then how to deal with that modification, right? So my dear friends, first of all, you have to see for just merging or combining two contracts as one contract, when can you say that two different contracts are a single contract? Okay, so you have to see, are the contracts entered into at or near the same time with the same customer or related parties of the customer? First you need to see. For example, I am a teacher, okay, so I am just entering into a contract with the students that yes, my dear students, I'll teach you FR, right? And I'll take 50 classes for FR, right? At the same point of time, I have entered into the contract with these people, these students, that I'll sell you my book on FR, right? And you have to, so I'll take all the examples from my book, right? So first, I am saying that I'll take 5,000 rupees for my 50 classes. Second, I am saying that I'll charge 2,000 rupees for my book, right? So these are the two things which I am charging from these customer. Of course, they are, so it is at the wish of them whether they want to purchase my book or not. But with some students, I have entered into a contract at the same time or nearly the same time. Okay. For example, in my first class, I have announced that I'll take all the examples from my book because I know that the students will buy that book, right? If I'll announce this thing to them. So they have already pay for the classes. And when they are joining the first or second classes, I have made this announcement. They have already paid for the coaching fee, right? Now they will purchase my book also. Majority of them will purchase, right? So this is these are the two different transactions which are entering into a same time or nearly the same time with the same class of customer, with the same customer, right? Not same class, same customer. Or even though if it is a related party of the customer. For example, one entity is having a transaction with a holding company, at the same time it is incurring a different transaction with the subsidiary company, right? So first of all, you need to see whether the contracts are getting entered into at the same time or nearly same time. Okay, means aspas, or at a nearly same time first, and it is happening with the same parties or with the related parties of the customer, right? If this is the case, then you have to ask different questions. If this is no, the contract is not happening with the same parties, then there is no question of combining the contract. Because if I'm selling books to J and I'm teaching to Sairam, so I have taken a tuition fee from Sairam and I have sold books to J. So these two are the different customer. So these two are the separate contract, right? So the question will not arise. If this contract is not entered with the same party or with the related party or with the same time or nearly the same time, if the answer is no, then this contract will be a separate contract. As simple as that, right? This will be a separate contract. But if the answer is yes, I am charging money from Jay as a tuition fee, and just after a week I have also charged money from Jay for my book, right? Whether these two different contracts can be combined as a one contract, okay, for the purpose of recognition of revenue, for the purpose of considering the entire price as a one transaction price. Okay, so guys, in this case, the condition says that when it has to be considered as a single contract, okay, when these two contracts will be combined, the contracts are negotiated as a single commercial package. The contracts are negotiated as a single commercial package, right? Consideration in one contract depends on other contract. Goods or services are single performance obligation. Okay, so friends, if one or more of the following criteria met, then we can say that two different contracts can be combined. For example, I'm saying that, guys, who wants to purchase my book now? Okay, I will sell this book to those people on 1,000 rupees, those students to 1,000 at a cost of 1,000 rupees. But a person who is not taking a classes from me and he wants to purchase a book of mine, I'll charge 2,000 rupees. So first of all, the class, the tuition fee and the book cost, these are interdependent, means these have been negotiated as a single commercial package. So I am offering that at 6,000 rupees, I am providing my classes as well as my book. Okay, at 6,000 rupees. This has been negotiated as a single package. But if someone has to take only classes, I'll charge 5,000 rupees. If someone has to buy only book, I'll charge 2,000 or 2,500 rupees. Okay. So here in this particular case, when I am charging money from J for tuition as well as book, so this contract is of course with the same party at the same time or nearly the same time, and the contract is negotiated as a single commercial package. Okay, and the consideration of tuition fee is depending on the consideration of book as well, and the consideration of book is depending on the consideration which is tuition fee. Okay, right, since the book is getting at 1000 rupees because I am paying a tuition fee, right? Or goods or services are single performance obligation. If the goods or services are not different performance obligation, it's a single performance obligation, we can say that yes, this contract can be combined as a single contract, right? This can be combined as a single contract. Is it clear, guys? Is it clear, guys? Right? For example, a single performance obligation, for example, I am giving you 50 classes. Now I'm saying you that I'm giving you 55 classes. Okay, in the next 5 classes I'll take the revision of the entire 50 sessions, so I'm giving you 5 more sessions. Okay, so this is a single performance obligation. Okay, this is not a different performance obligation, this is kind of a single performance obligation, right? So let's have illustration number 4. So before moving into illustration number 4, Thota is asking, sir, illustration number 2, it is clear that the contract term is 3 months, but how it is useful, sir? Say, do we recognize only 3 months revenue out of 12 months? No, Mr. Thota. For 3 months, there was an enforceable rights and obligation. So sitting on the day 1 of 3 months, you are clear that I'll get the money for 3 months, right? So upfront revenue for 3 months can be recognized, of course, over a period of time. But after 3 months, you have to recognize a revenue when on a month-to-month basis. So every month is a contract term. Okay. For example, the customer has not walked away from the contract and the customer has availed the services. So at that point of time, only you will recognize the revenue. Okay. So it will be on a month-on-month basis because there is no enforceability clause. Okay. I'm not saying that you will not recognize a 12 months revenue. You have to recognize revenue for a period for which the customer has availed the services. So it should be for on a month-to-month basis, right? I hope it is clear to you. But for 3 months, it is quite certain because there is an enforceability clause. Yeah, illustration number 4 on combination or combining of the contract. Manufacturer of airplanes for the Air Force negotiate a contract to design and manufacture new fighter planes for a Kashmir air base. Okay. At the same meeting, the manufacturer enters into a separate contract to supply parts for existing planes at other bases. So friends, if you see this particular illustration, so there is an airplane manufacturer, for example, Boeing company, and they have negotiated a contract. They have negotiated a contract to design and manufacture new fighter planes for Kashmir Air Base. So one is the supply of airplane, right? Manufacture and supply of fighter planes for Kashmir Air Base. And at the same meeting, they have also entered into a separate contract to supply for spare parts for the existing planes at other air bases. So these spare parts are nothing to do with these fighter planes. Okay. So first of all, we need to understand whether the contracts are happening with the same party. Answer is yes. Whether the contract is happening with the same party at the same time or nearly the same time, answer is yes. Okay. Then we need to ask the remaining 3 questions. What was the remaining 3 questions? Whether the contract are negotiated as a single commercial package, answer is no, because it is not negotiated as a single commercial package, because the fighter planes are different, which has to be delivered at the Kashmir Air Base, and the supply parts has to be, has to be entered into a separate contract, which is for the existing planes, not the fighter planes, existing planes at different air bases. Okay, not these planes. Okay, because these two have a separate commercial objective, right? So fighter plane has a separate commercial objective, and this existing spare parts has some different commercial objectives, because spare parts has to be installed in the existing fighter planes, right? Consideration in one contract depends on the other contract. Answer is no, it is not depending on the other contract. And whether it is a single performance obligation, it is not a single performance obligation, it is a different performance obligation. The fighter plane has nothing to do with the spare parts, and the spare parts are nothing to do with the fighter plane, right? So contracts were negotiated at the same time, but they appear to have separate commercial objectives. Manufacturing and supply contract are not dependent on one another, and the planes and the parts are not a single performance obligation. Therefore, contracts for supply of fighter planes and supply of parts shall not be combined, and instead they shall be accounted for separately. Right? Illustration number 5. Software company S enters into a contract to license its customer relationship management software to customer B. So this company S is supplying a license to its license of its customer relationship management software. So this is a software and this company is providing a license to customer B, right? 3 days later, in a separate contract, same party, nearly same time, but the contract is separate. This company agrees to provide consulting service to significantly customize the license software to function in B's IT environment. So first, there was a contract of providing a license to this particular software. And 3 days later, the company has entered into a separate contract to provide consulting service to customize this software so that it can work on the B's IT environment. So guys, first of all, tell me, and it is written that B is not able to use the software until the customization services are completed. Okay. So guys, it is very clear that the customer will not be able to use this software until the customization services are completed. So what does it mean? It means, what would be the performance obligation? Is it only providing a license to this software? Because when they have entered into this license, so they have realized that, okay, there is no use for this software, right? If the ICAI will say that, guys, we are providing a free classes, or let's say we are providing a classes at very nominal cost to all of the students who are going to appear for CA final examination, right? But ICAI will not provide you a link. Whether it will work, whether it will be useful, will you pay the money? Answer is no. So in this case, the software license has been provided, but it is of no use in B's IT environment. So it will be usable, it will be useful if this company will provide some consulting service for its customization so that it will be usable in the B's IT environment. What does it mean? So of course, this is a contract with the same party, which is happening at the nearly the same time. Whether it has been, whether it has been negotiated as a single commercial package, we don't know. Consideration in one contract depends on other contract, we don't know. Whether goods or services are single performance obligation, answer is yes. Because without customization, B will not be able to use the software, and hence it is not two different performance obligation, it is a single performance obligation. So S determined that two contracts should be combined because they were entered into a nearly the same time with the same customer, and the goods or services in the contract are single performance obligation. Guys, there are two things which are very important in the accounting and reporting domain. One is substance, second one is form. So far we were more, we have more learned things about the form of the contract. But now substance is very important. Now you will say that, sir, how does it matter? The company S has already provided the tool to the customer. Okay. And how does it matter whether it will provide the consulting services or not? The company has to keep this contract as a separate contract and the another contract as a separate contract. And the company needs to recognize revenue once this software has been provided. And the consulting revenue has to be recognized separately because the company has to take it as a separate contract, right? So this is not correct. What is the substance? The substance is if the performance satisfaction, what is meant by satisfaction of performance obligation? You will read this word that the revenue is going to be recognized when the performance obligation is satisfied. What is meant by the performance satisfaction of the performance obligation? What is meant by that? What is meant by that? Amazon, you have ordered a bicycle from Amazon, and that bicycle, Amazon has sent that bicycle into a different parts. Okay. And for using this thing as a bicycle, so what is the nature of this thing and what is the usage of this thing? If I have to avail, if I have to enjoy the fruit of this bicycle, if I have to enjoy the benefit of this bicycle needs to be assembled, right? So we cannot say that Amazon cannot say that I have delivered the unassembled part on the premises of the customer, so I have to recognize the revenue. It cannot recognize the revenue. Why? Because this assembly is very important. Till the time this assembling will not happen, the customer will not get the benefit out of usage of that particular product. And if the customer will not be able to get the usage out of the benefit of that product, that product, it means the performance obligation is not yet satisfied, right? So you need to see, is it a different performance obligation or is it a single performance obligation, right? So you need to see that, right? Second example of performance obligation, you guys have purchased refrigerator. You must have purchased a mixie refrigerator, right? So even last year I bought a Samsung refrigerator. Okay, so just I bought this refrigerator from Tata Chroma, and I get the delivery at my residence. And generally when you purchase some electronic products, so you can call the customer care and you can ask for installation or demo, right? So he will come and he'll show you the demo that yes, this is a gas chamber, this is a freezer, okay, this is deep freezer, okay, this is vegetable box, blah blah blah. So you have to keep this into this temperature. Whenever you go on a vacation, you have to put this button off, you have to put this button off, right? But generally, if I'll tell you, I can tell you 80 or 70% of Indians don't call for these kind of services, although these are free, of course. They just bought the mixie, bought the television, bought the refrigerator, just plug in and start using that, right? Even though the demo service is there, they are not calling the customer care, right? So now the point is whether Chroma or that, let's say Samsung, will recognize the revenue once they deliver the goods to the buyer and this installation, this demo has not been completed. Answer is yes, they can recognize the revenue. Why? Because the demo is just a part and parcel of this contract, and it is not that significant that if they will not give the demo, the customer will not be able to use that product, right? Understood? But in this case, it is considered as a single performance obligation, and hence these two different contracts can be combined, and both the revenue will be recognized only when this consultancy service will be get completed and when the customer will be able to use the software. So guys, I hope as far as combination of the contract is concerned, so you are well versed on, you are well aware about this thing. I hope you have understood this, right? Coming to the contract modification. So we talked about two different contracts. Is it combined or is it not combined? Why that was important? Just think from this perspective. So there was a contract where the tool was delivered, but again at the nearly the same time the second contract was entered for consulting. Okay, so due to the second contract of consulting, because if the consulting would not have been given, this software cannot be used. So see, why this contract have been combined and what was the implication for combination. The first revenue has to be booked. The revenue from tool, the revenue for sale of tool has to be used only when this consulting service needs to be provided. So this is the implication, right? So the timing has been postponed, the recognition of revenue. So guys, now coming to the contract modification. What is a modification? So modification means change in the scope of the contract. Okay, so I have entered into a contract with the contractor. So I have a piece of land and I want to construct a 2-story building in my premises. So when this building was getting constructed, after 3 months, I have told my contractor that I want one more floor. So I want 3-story building, not 2-story building. Okay, so it means there is a change in the scope of the contract. And of course, if there is a change in the scope of the contract, so probably the price will also change. So what is a modification? Modification means either change in the scope or price, change in the scope and price, change in the scope, change in the price of the contract, which is approved by the parties. So that is known as a modification, contract modification. Now the accounting treatment depends on the nature of modification, right? For example, the scope of the contract changes due to the additional goods or services which are distinct, and price of the contract increases by the standalone selling price of the added goods or services. So for example, I have entered into a contract with J that I'll give you 50 classes and I'll take 5,000 rupees, right? So what is the cost of per class? 100 rupees. 100 rupees is my rate. Or let's flip this example. I have entered into a contract with a company for providing a training on Ind AS, and for a daily basis I'll charge 10,000 rupees, and there was a contract for 10 days, so I need to charge 1 lakh rupees, right? So the participants were very happy from the training, and the participants have told HR that we need 5 days more training from this consultant or trainer. They come to me, okay, and they told me that Mr. Alok, we want additional 5 classes. Okay, then I told him, okay, if you want additional 5 classes, of course there is a change in the contract, the scope is getting changed, the scope is increasing, right? So this 5 classes are different from 10 classes. In the 10 classes I have told I have taught something different. In the next 5 classes I'll taught something different. So these 5 classes are the added goods or services which are distinct means different, right? Means this 5 classes are nothing to do with this 10 classes. Or for example, I am purchasing 10 quantities of a mobile phone, so I am entering into a contract with the Samsung, and now I am saying my 5 employees are joining in the next month, so please increase this quantity from 10 to 15. Matlab, I need more 5 quantities, right? So in my example, I get more 5 training, right? Training for more 5 days. And I'm saying that, of course, first the scope is increasing, additional goods or services are getting added, and the price of the additional goods and services are also on the fair value. Means for example, 10,000 rupees is the cost of the per day training. So for the another 5 classes, I am charging 50,000 rupees. Now tell me, whether from this 10 classes of 1 lakh rupees, which is the existing contract, and the new contract of 5 classes 50,000 rupees, am I able to get influenced for this 5 classes due to the 10 classes? Answer is no. For 10 classes I have charged market value, for another 5 classes I am charging market value. What does it mean? It means that there are added goods and services which are different, which are separate, which is nothing to do with the last goods and services delivered, and the additional goods and services are delivered at a market value or fair value or their standalone selling price. Okay, so it means in this case, if there is a additional goods and services at their fair values, at their standalone selling price, it means that 5 classes contract will be a separate contract. That 5 classes contract will be a separate contract, right? This will be a separate contract. Clear? Is it clear? Sir, in this example, for example, you have taken 10 classes at 1 lakh rupees, which is 10,000 rupees per day. And after 5 days, the HR contacted you, and the prices of the training got decreased, right? Earlier you have taken a physical classes, now you have to take a virtual classes. So the market price have been decreased, and the other trainer are willing to do this at 5,000 rupees. Even you are doing this training, so from today onwards, whatever contract you are entering into, you are providing the training to other companies at 5,000 rupees. So friends, these 5 classes are added goods or services. I am giving this 5 classes as 5,000 rupees per class, but this 5,000 rupees is not a negotiated price. This 5,000 rupees is standalone selling price. So at the time of today, when this company wants my additional services, so 5,000 rupees is the fair value of these 5 classes, right? So still it will be considered as a separate contract. So you have to see 2 things. One, additional goods and services, okay? And if these additional goods and services are at standalone selling price, which is fair value, right? You are not required to see, is it the same value? You are required to see, is it the standalone selling price as of now? Is it the fair value as of now? If the additional goods and services are getting sold at fair value, it means there is no influence of existing contract, and hence it will be considered as a separate contract. I hope it is clear to everyone. So in my last example, Jay is asking, sir, what if without demo the customer will not be able to run machine properly? Jay, for example, the machine is highly customized machine. Okay, it is not a normal refrigerator or a normal machine. It is a highly customized machine. which cannot run without giving a memo, without giving a demo or training. In that case, that will be considered as a single performance obligation. I mean to say, the company has to recognize revenue only when the company will provide the demo, right? So friends, let's take an example so that you will be able to understand from the institute study material. An entity promises to sell 120 products to a customer for 1,20,000, 10,000 rupees per product, right? 1,000 rupees per product. The products are transferred to the customer over a 6-month period, right? The entity transfer control of each product at a point in time. So whenever one product will be delivered, the control of that product will be transferred to the buyer. And it has to be transferred over a 6-month period. After the entity has transferred control of 60 products to the customer, so out of 120, 60 products has been transferred, right? The contract is modified to require the delivery of an additional 30 products. So after delivery of 60 products, the company is saying the customer is asking for delivery of additional 30 products, means the total 150 products to the customer at a price of 950 per product, which is the standalone selling price for such additional products at the time of placing this additional order. When this 120 products were ordered, the price was 1,000 rupees. When this 30 products are getting ordered, at that point of time, the price was 950 rupees, right? And hence, the customer has ordered this 30 units at 950 rupees, right? The additional 30 products were not included in the initial contract. This is a separate contract. This is a new modification. This is a new change. So it is assumed that the additional products are contracted for a price that reflect the standalone selling price. So these additional 30 units are of course at a market value, at a standalone selling price. Determine the accounting for the modified contract. So do I say that this entire 150 product is a one contract, or should I say that for this 120 product there is one contract, and for another 30 product there is another contract? So my dear friends, see, there is an additional goods or services which is different, which is nothing to do with the last goods or services. So earlier delivered goods are different, these goods are different. When I say different, of course, for example, the company has entered into a contract for 120 mobile phones. So the mobile phones delivered earlier has a different usage, and this 30 mobile phone has a different usage. Different usage in terms of, for example, these 120 mobile phone is given to the 120 employees. This 30 mobile phone will be given to the 30 new employees, right? So this use will be done by the different people, right? And the new product are getting sold at a fair value or standalone selling price. So this will be considered as a separate contract. This will not be considered as a existing contract or amendment in the existing contract. This will be considered as a new contract, separate contract, right? Is it clear, friends? Is it clear? Now coming to the second example, right? So if there are additional goods and services, but the additional goods and services are not getting sold at a market value, it is getting sold at a less than the market value. Why? Because so I am providing 10 classes I am providing 10 classes to a trainer. Okay. So in that case, when I'm providing 10 classes to a trainer, I'm providing 10 classes to a corporate, okay, as a trainer. So I have charged 10,000 rupees per class. And HR contacted me and HR said that, Mr. Alok, you need to provide 5 more classes to our participants or to our people, right? But you can see that we have already paid you 1 lakh rupees, right? And now we are asking for more classes. So I know the market value is 10,000 rupees per class, but we will not pay you 7,000 rupees per class. And don't think this contract as a 7,000 rupees for 5 classes, 35,000 rupees for 5 classes. See this contract in the completeness. So we are paying you 1,35,000 for 15 classes. So it will cost you 9,000 rupees per class. Can you see the way this conversation is happening? Can you gain something out of this conversation? So HR is saying me that I know that 10,000 is the market value, but see, we are giving you so much of business. We are giving you total 15 classes. Don't see 5 classes. We are giving you 15 classes. And don't see that we are paying you 35,000 rupees for 5 additional classes. We are not paying you 35,000 rupees for 5 additional classes. We are paying you 1,35,000 for 15 classes. It means 9,000 rupees per class, and such discount you have to give us, right? Because we have taken so much of classes from you. So additional goods and services are there, but it is not at a standalone selling price. It is not at a market value. So in that case, this contract will not be considered as a separate contract, and this contract will be considered as a amendment in the original contract. This contract will be considered as an amendment in the original contract, right? Clear? Is it clear? I hope it is clear to everyone. Now the question arises, sir, what will be the accounting in such cases, right? What will be the accounting in such cases? Yes. So first of all, is the contract modification approved? Answer is no. The contract modification is not approved. In that case, we cannot say that any modification exists. So for being a modification, the modification should be approved by the parties, right? If it is yes, you need to see, does the scope of contract increase due to addition of goods and services? Like I have taken 2-3 examples. We have taken institute study material example, 120 product, 30 product. Yes, there are additional goods and services. Yes. Whether the price of the goods and services, additional goods and services, are at market value, are at fair value? Answer is yes. In that case, it will be considered as a separate contract. But the scope is increasing, whether the scope of contract increase due to addition of promised goods or services. Okay. So for example, no. Are the remaining goods or services distinct from goods or services transferred on or before the date of contract modification? Okay. Or for example, the scope is increasing, but the price is not at the fair value. So either the scope is not increasing, but the price is changing, or the scope is increasing, but the price is not at the fair value. In that case, you need to see whether the remaining goods or services, are different, or the remaining goods or services are not different before the contract modification. For example, I have taken a security guard services for, let's say, 6 months. After 3 months, I have increased the scope of this service by 6 months, by additional 6 months, right? So initially, as per the initial contract, it was 6 months. After 3 months, I have added another 6 months. So now the contract is for 12 months, right? So the services which has been provided by the security guard for the first 6 months has nothing to do with the next 6 months. Okay. Am I right? For example, if the security guard would not have been provided the services for last 6 months diligently, he cannot say that, boss, don't worry, for the last 6 months, even I'll compensate, and in the next 6 months, I'll provide the entire service of 12 months. Can he say that? Answer is no, he cannot say that. Being a chartered accountant, if you have to do the bookkeeping on a monthly basis for 12 months, right? So every month you have to do the bookkeeping. So whatever bookkeeping you have done on a month-to-month basis earlier, that has nothing to do with the next period. Okay, so that has been gone. So whatever services you have been provided earlier to a company, the company has got the benefit out of that services, and the future services are different, right? So you need to see whether after modification, the additional goods or services are different or are same. How can I say the same? So in this example, it is different. How can I say it is same? For example, I have just entered into a contractor services for construction of my house. Okay. And while doing the painting of my walls, I have told the painter that, dear painter, instead of putting a single line, coating, please put the double coating. Okay. Please put the double coating. So of course it will take time, and the price has also been increased. It is not on a standalone selling value. Price is also getting increased. Okay. But this is not different. Okay. So on a single coating, I'm asking for the double coating. Okay. We cannot say that these two are the different, these two will provide a different usage, different utility. Okay. So this is the same wall. Instead of single coating, I'm asking for double coating. Right. So my dear friend, in this case, I cannot say that the remaining goods or services, double coating is different from a single coating. I mean to say, from the benefit perspective, I cannot say that this is a different goods and services before or after modification, and hence the treatment would be different. So if the remaining goods or services like security guard is different before or after the modification, then you can say that the earlier contract is terminated and the new contract will be there. So after 3 months, so initially it was for 6 months, but after 3 months you have entered into another 6 months. So when you have entered it for another 6 months, so the first 3 months contract will get expired and the new contract will be entered for 9 months, right? So termination of existing contract and entered into a new contract, right? So it will be a termination of existing contract and creation of new contract, means prospective accounting. But if the goods or services like my painting services, single coating, double coating, in this case it will form part of an existing contract and single performance obligation exists. So in this case you have to use a cumulative catch-up approach. It is not considered as a new contract, it will be considered as a change in the existing contract. And in the earlier scenario, so see, in all these three scenario, what will happen? In the first case, when the goods are new, when the goods and services are added at the fair values, so there were two contracts, one is for 120 products, one is for 30 products. So these two contracts are running parallel. When the goods and services are different but the price is not at fair value, in that case goods and services are different, price is not at fair value, or it could be different. Okay, so in this case the existing contract has terminated and the new contract has come into picture, so only one contract is there. Okay, in the third case the new contract is not there. Why? Because the goods and services are same before and after the modification, it is same. Okay, so in this case the existing contract will be amended and the cumulative catch-up approach will be used. I'll show you with the help of the example. Illustration number 8. On 1st April, KLC Limited enters into contract with Mr. K for providing a machine for 2.5 million. So one performance obligation is machinery for 25 lakhs. 1 year of maintenance service for 55,000 per month. Okay, 1 year. On 1st October, that is after 6 months, KLC and Mr. K agree to modify the contract to reduce the amount of services from 55,000 to 45,000. Now, my dear friends, you can say that the price was 55,000 and it was negotiated earlier. But after 6 months, they agreed to reduce it to 45,000. So there is a reduction in the price. Whether the scope is changing, the scope is not changing. There is no additional goods or services. So it means you need to see whether the services are same or the services are different. When I'm saying services are same or services are different, what does it mean? It does not mean nature of service. It means whether the services delivered before have a different utility and the services delivered after have a different utility, different uses, different benefit. Answer is yes. Okay. The maintenance services which has been provided in the 6 months and the maintenance services which will be provided in the next 6 months will have a different aspect, right? Will have a different aspect. So it is a different service, right? So in this case, what we will do, whether it will be amendment in the existing contract or it will be termination of the existing contract and creation of a new contract. So what should we do? Guys, what should we do? In this case, the next 6 months of service are different, distinct means different from the services which has already been provided in the first 6 months before modification. Therefore, the company will account for the contract modification as if it were a termination of the existing contract and creation of a new contract. So first contract will be for 55,000 multiplied by 6, right? So it will be 3,30,000, right? And the second contract will be, the new contract will be 45,000 multiplied by 6, which is 2,70,000, right? So this will be considered as a new contract. Therefore, the consideration allocated to remaining performance obligation is 2,70,000. Okay, understood? Which is for the next 6 months. I hope it is clear to everyone, guys. So Priya is asking, that means there must be some benefit different from the existing contract to be separate contract. Yes, Priya, you can say that. Now, so we have taken an example of 120 product for separate contract. We have taken an example of KLC for making you guys understand that the scope is not changing, only price is changing. Okay, and the services provided before the modification and after the modification have different benefit, right? So in this case, the existing contract has been terminated and the new contract has been entered. Now the last example. Growth Limited enters into an arrangement with a customer for infrastructure outsourcing deal. Based on its experience, Growth determined that customizing the infrastructure will take approximately 200 hours in total to complete the project and charge 150 per hour. So this contractor has estimated that I'll take 200 hours and I'll charge 150 per hour. But after incurring 100 hours of time, the company and the customer agree to change an aspect of the project. So they are changing some scope of the project and increases the estimate of labor hours by 50 hours at the rate of 100 per hour. So some aspect have been changed and the efforts have been increased. And this additional 50 hours is at 100 rupees. The initial 200 hours was 150 rupees. Okay. So it was a construction service. You cannot say that, okay, for this, for till the time, whatever services we have got, we have some benefit, and for the another service we will have some different benefit. You cannot say that. Like it is a interrelated kind of thing. So determine how contract modification will be accounted for. So in this case, the contract modification will be accounted for as a amendment in the existing contract. So you have to use a cumulative catch-up approach. We'll see how this has to be done. So what is the initial contract amount? 200 hours, rate is 150, the amount is 30,000, right? What is the modification? 50 hours additional added, 100 rupees is the rate and amount is 5,000. So what is the total? 250 and 35,000 is the total. So 35,000 divided by 250 will give you 140. So in this case, how many hours has already been completed? How many hours has already been completed? 100 hours. So how much revenue needs to be recognized? 100 multiplied by 140, 14,000 revenue needs to be recognized. But how much revenue has already been booked? 100 multiplied by 150, 15,000. So this 1,000 revenue needs to be adjusted from the future recognition, right? So in future, 1,000 revenue needs to be recognized lesser, right? So it has to be considered as a deferred revenue. So 1,000 revenue needs to be reversed, right? So friends, I have completed step 1. I identify the contract with the customer with the helicopter view and the entire agenda of Ind AS 115. And now the time has come to conclude the session, conclude the class. I hope you guys have understood the step 1 and agenda of Ind AS 115 in detail. So day after tomorrow, we'll start with the step 2, identify the performance obligation. And just let me know if you have any queries so far. So I'll take the query in another 2-3 minutes, then I'll conclude the session. I hope you found this session useful and you would be able to understand the nitty-gritties, complexities of Ind AS 115 to the extent which I have taught you today. Okay. So let me look at the query box. If there will not be any query, then I will be happy to conclude the session. Thanks, Priya. Thanks for the feedback. So Jay is asking, for taxation purposes, will collectibility criteria will be ignored and full revenue be booked? So Jay, for the taxation purposes, you need to see the provision of income tax. Okay. For example, in income tax, it might be said that since you have performed the obligation, in that case, from the GST perspective or other taxation perspective, the regulator or the tax department can say that you have to recognize the revenue, right? So that is from the tax regulations perspective. Thanks, Mansi. Thanks, Karthik. So I hope you guys don't have more queries so far. So let me conclude the session. Thanks, Airam, for your confirmation. Yeah, thank you so much, guys. Stay healthy, stay safe, stay happy. So we'll meet again in the part 2 of Ind AS 115 on day after tomorrow, 7 to 10 a.m. in the morning, 24th of February. Thank you so much. Bye-bye. Take care.